justify that.
Well, how did you feel in the middle of 18 when the last time the short-term rates were here, and then we had an expansion of the market after that? So it's really going to come down to the earnings growth, and our team is constructive, whether it's Chris Heisey, who's been on your show many times, or Candace Browning-Platt and the research team on the institutional side. It's going to be an earnings growth driven outcome, and valuations have moved up dramatically. Our stock is still cheap, and the financial sector is still cheap relative to the industry, but that's a given.
And you're buying back.
And we're buying back a lot. But I think, the debate will be had, but I think people extrapolating from correlations, you got to be careful, because the last correlation we have is back in August when I was talking that, we're going right into recession, yet no economist you talked to had a prediction for recession in 2000.
So then was it a mistake for the Fed to do what it did?
I think the mistake did what they should have done, which is to provide a safety net, as the chairs called it, or insurance or whatever, and you can look back to the precedents of Fed, and they've been clear about where they stand. But as long as employment stays strong and wage growth is picking up, and that's the good news for the U.S.
Would you raise interest rates?
I think they were going to hold, and I think
they are going to hold. But do you think
our predictions are going to hold? And
do you think that's a mistake?
I don't guess what they do. It doesn't really help.
And you saw Dalio's notes that there's not a central banker in the world that wants to preempt inflation at this point.
No, I know.
So we're in big. Yeah. No one's going to do it. So we're going to get out. We're going to mess up by letting the pendulum swing too far.
And that's the question.
That is the debate, and we'll find out probably in 5 years whether that happened or not.
You have a good story. You're in Davos now. I'm surprised you admitted to doing buybacks. Have you got your story together on why, in your case, buybacks aren't some horrible way not to take it out of employees' pockets and put it back in shareholders and CEOs' pockets?
Well, let's think about that. Last year we bought back a lot of stock, and what did we do? We went to $20 an hour for minimum starting wage in our company beginning this quarter. Mm-hmm. 2 years ago, a year ago, I told you it was going to take us 2 years. We did it in 1 year. We did $1,000 special bonuses in cash to everybody under $100,000. We did shares above that. We just had a large bonus pool that we'll pay out over the next few weeks, so we're sharing success with our teammates. We've generated record amounts of small business loans, or the largest small business
What's
lender.
the justification for the buybacks? So I'm sure you could have
found some run
ESG stuff that would have been a better use for the buybacks.
This is a hard sort of conceptual debate.
Playing devil's advocate.
Our issue is not capital. Our issue is expense dollars. And so
banks are overcapitalized.
Yeah, and so we have more capital. And what we're using is using the excess capital we built up in the early part of the decade that Becky referenced earlier, and giving it back to shareholders. And that's what we're up to. So we can both do buybacks and deliver what society needs from us, from our teammates, from $250 million charity, $5 billion of low and moderate income housing, hired 6,000 people from low and moderate income neighborhoods. If that's not a great track record, and we're doing buybacks, the point is you can do both if you manage both outcomes.
We're going to hear from the president in just about 20 minutes. Is there something you want him to say?
I think predicting what comes out of Davos.
Not predicting what he's going to say, but is there something you'd like him to say?
Well, I think the idea of keeping work on the trade deal so that the global economy can continue to function with more certainty, I think would always be a good thing. And I think the resolution with China, the USMCA, is starting to move through the system, and ultimately something has to happen with Europe and other countries, because we need, in the tax deal with France, these are all important pieces of
Schwartzman is going to come on here in a second and say that was a transformative deal in China, not just a truce where we stop hitting our head against the wall and just arrive at some truce, but actually transformative in terms of changing the way we do business with China in a positive way. Do you agree with that?
I agree it's a positive thing to get the deal done. I'll let
to get it done, or was there something
what the president's going to say and predicting what Steve's going to say are probably dangerous.
They might be on the same page.
Yeah, they might be on the same page.
Well, you are also the head of the International Business Council, and I know that you've been looking at a lot of the things that have been circulating through Davos, talking about sustainability and other issues. I think you have some news about what Bank of America is up to with some of those issues right now.
Yeah, so we have had a commitment to environmental sustainability for a long period of time. The word sustainability is used in the Davos context, a broader one. We'll come back to that. But when I became CEO, we had a commitment, I think, $25 billion. We doubled it to 50. 4 years ago, we went to $125 billion, and we completed it in 4 years. It was a 10-year commitment. So given that, we've now announced a $300 billion commitment over the next 10 years. To make sure we can do that on a business basis and drive the business, Ann Finucane, who runs a lot of this for us, our ESG work and everything, this team with Tom Montag, who runs the business, in the Sustainable Markets Council, because the business opportunity to deploy that money is huge, whether it's green bonds, whether it's different types of financings for solar installations, wind installations, and different technologies is tremendous. And so every business has to give to the office in order to get $300 billion done. So whether it's small businesses making the transition, medium-sized business, or large, getting to their carbon neutral commitments, we can help them finance that. And so we need the whole company to be driving at it, and Ann and Tom will drive that forward.
Between what you're doing and the kind of things you're hearing from Larry Fink, do you think it's actually going to change the way business operates? Meaning, do you think that companies are actually going to fundamentally change because they want a better score from Larry and because they want a loan from you?
Well, it's even deeper than that. It's that we have to get, what we're working with the International Business Council is to define Klaus's vision of stakeholder capitalism starting 50 years ago through all the derivations. The BRT statement, the 2017 signature by all of us that we're going to support the SDGs, the 2015 SDGs. So what you're trying to say is you can deliver profit, you can deliver success for customers, employees, and shareholders, and you can deliver on the society, the SDGs. And so we're defining the metrics to judge that. That ought to allow owners of assets, managers like Larry Fink of assets, and operators to say success is along this dimension. So to give you a simple way to think about it, Klaus and I sent out a letter with Fiki to everybody saying, what date are you carbon neutral and can you commit to it? And if all the companies, our partners at Davos, commit to carbon neutrality, we're carbon neutral as of this year. Matter of fact, we made it at year end. That will help drive the demand for the alternative energies that the power companies need to get them carbon neutral. And so that kind of iteration by having a simple set of 22 metrics is what we're shooting for.
Is that a message that resonates with investors?
It does, because as you, to Andrew's point, as you go into investors now, the people that own the assets, our $3 trillion at Merrill Lynch, $25 billion of it's already in ESG funds and more of it's going there, but all investors are saying, hey, I want you to invest in companies who are doing the right thing by society.
Isn't there a cost to all of this? And the reason I say that is for you to be carbon neutral, you're buying carbon credits from other people. And it effectively means that long-term, everybody can't buy carbon credits, right? Because there's not going to be enough of it, right?
But this is why the power companies have to make the real progress, because at the end of the day, the power generation scheme has to.
It has to work, though, too, Brian. I mean, the Journal had a great editorial on this, on whether down the road, a lot of IPC forecasts were way overstated on what the warming is going to be. If they're wrong about how serious it's going to be in the next 20, 30, 40 years, and you're forcing a move into renewables where gigawatt prices is twice what it should be, it's going to hurt developing countries, it's going to hurt everyone, it's going to hurt shareholders, and making these decisions where it's going to have consequences. Being woke is going to have consequences if it doesn't work out right. So
the key is to think about that balance and let companies, let the industry and their owners drive it, as opposed to having it mandated.
Right.
Whether we're going to be right 50
Andrew,
years out will be
BlackRock voted against 80% of climate initiatives in process.
I did see that.
So, I mean, it sounds great. We're in Davos and everybody's talking the talk, but
I get that. People say, isn't this greenwashing? I say, which part of $300 billion do you understand is not greenwashing? I mean, this is not some small thought process, and it's a business force, and so we do a lot of business. So the point is,
we'll see what happens. Like the guy who's going to be talking about an hour likes to say, we'll see what happens.
Well, he has a very different view of all of this.
He does. He does.
Okay.
Economic sustainability. Just don't forget that.
We knew record profits and delivering that.
Good job. Kudos.
Hopefully that's good enough for you.
Kudos, Brian. I don't know. You'll never live up to your brother's expectations. That's all I know.
I'll never live up to yours either.
Yeah, that's right.
Brian, you want to? Thank you very much for joining us today.
Aspire.
Brian Moynihan.
Aspire.
Thank you.
Guys.
Hey, thank you.
Appreciate it.
Joe.
Coming up, we already talked about it. I don't have to tell you. Blackstone's Steve Schwartzman is going to be here to talk about, I want to talk to him about China, especially, but tackle everything from the economy to trade. He's just one of the big guests and many power players that we're going to be speaking with today. Don't miss the CEO of Verizon, Cisco, Citigroup, Anheuser-Busch, InBev, and also Marriott. Arnie's here, plus Ray Dalio, Paul Tudor-Jones.
Huge lineup. What a day.
Probably rooming here together. Larry Kudlow, David Rubenstein, and Scott Minerd. We'll see if Scott's less bearish. None of that happened. Anyway, plus President Trump is just minutes away from addressing the World Economic Forum. We're going to bring you a front row seat as soon as he begins. You're watching a special edition of Squawk Box in Davos, Switzerland. Thank you, Brian.
Take the helm and ignite your spirit of adventure with a Sunsail holiday. Relax on a skippered yacht from sunny St. Lucia to the nutmeg-scented shores of Grenada. Or take charge with a bareboat charter along Dubrovnik's glittering coastline. With up to 20% off selected destinations, now is the time to book your Sunsail adventure. Sunsail. See the world differently.
Along the goal line, scores and takes it home.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
And a move, and a shot, and he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three, it's up and in!
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Coming up live from Davos, Switzerland, we've got Blackstone co-founder and CEO Steve Schwarzman. He's going to join us right after the break. And then President Trump getting ready to address the forum. Many expect him to touch on trade, the economy, and so much more. When he begins speaking, we will bring it to you live right here on Squawk Box. We're back in a moment, live from Davos, Switzerland.
I need new struts for my 2010 Chevy.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Let me see struts by AC Delco, KYB, and any under $50.
We might be able to get some struts from the warehouse.
Why watch the counterman tap on his computer and hope he chooses the right part? Go to rockauto.com. Auto and body parts from hundreds of manufacturers. Choose the brands, prices, and features you want. Auto parts at the lowest price. Conveniently delivered to your home or business.
All the parts your car will ever need, Rock Auto.
Rising energy costs are frustrating. Electricity rates continue to increase, and there's no relief in sight. It's also smart to prepare for power outages that can leave you in the dark. You need a solution that will help you save money, prepare for power outages, and help the environment. Introducing the Generac Power Cell, a battery storage system that harnesses the power from the sun to help reduce your electric bill and provide backup power during utility power outages.
With the battery storage solution, we're saving about $450 a month.
PowerCell's revolutionary technology captures and stores electricity either from solar panels or the electrical grid. It allows you to use stored energy during peak demand times when electricity costs are high, which helps reduce your electric bill, saving you money. And when a power outage occurs, PowerCell is ready to supply backup power to your home. PowerCell's modular design allows for easy customization for any home or budget. And PowerCell is backed with a 10-year limited warranty.
It was a simple installation, very neatly installed. It was done very quickly and efficiently. Since installing our power system, we've been experiencing a savings of $1,500 a year.
Generac has been a trusted provider of backup power solutions since 1959 and provides 24/7 customer support.
The battery storage solution in combination combination with the solar has been one of the best investments we've ever made.
Special financing is available with low monthly payment options. You will likely qualify for tax credits and energy rebates, which could save you up to 30%, adding to the savings you'll enjoy over time with PowerCell. Call now to schedule a free in-home assessment. The call is free, the assessment is free, and there's no obligation to buy. Act now to receive PowerView, Generac's home energy monitoring system, a $300 value. With PowerView, easily keep tabs on your energy consumption, monitor your battery usage, and track your savings. Don't wait. Call or go online now. PowerCell, savings powered by the sun.
Good morning and welcome back to Squawk Box, live from the World Economic Forum in Davos. And we are waiting to hear from President Trump. He is here. He's scheduled to deliver some opening remarks within minutes, and we'll take that. First, so join us now, Steve Schwarzman, founder, CEO, and chairman of Blackstone Group, who I would say was one of the more prominent individuals in the front row of the signing of the China deal. I noticed that you were there, and you were smiling and
got a nice shout out too from the
and you have I don't know if it's a non-consensus view, because I don't know where we should look for consensus views. If you look for, the media or people that don't want Trump to succeed, it's a nothing burger. I've seen the word nothing burger again and again about the China deal. You have a different take that it actually is a transformative deal in a number of ways. Could you explain?
Well, I think it's an important deal. Since 1949, when the People's Republic was established in China, the U.S. hasn't done a bilateral deal. And so I think it's really important that that's occurred. There's a lot of interesting things in the agreement, whether it's on intellectual property or financial institutions, and also compliance and resolution of problems. And I think that China looks at this as a very important thing because we were basically escalating to a very bad place between the two countries. These two countries together, depending upon how you do your numbers, comprise 35 to 40% of the entire world's economy. There are over 200 countries. And so when these two don't have it right, it's a big deal.
But even if there's not a phase two, and that's what we heard, is that, okay, we got a few things done in phase one. We got some ag buys. And many people said, just getting back to where we were a couple of years ago on what China used to buy. And if we don't get a phase two, we really haven't accomplished anything. But then when we look more deeply into it, there is IP things in there. There are ways of, if there's non-compliance, the tariffs go back up. When people looked at the fine print, it seems like, the notion that only in a phase two do we really accomplish anything. That's not the case.
Well, I agree with you on that, Joe. But I also think that it's in China's interest as well as the U.S. interest to do a phase two deal. And, they think it's a good idea and important. Most of the tariffs were not rolled back in this phase one. Right. So there's a lot of incentive, if you will, to get to phase two. And they're quite serious about that in China.
So we're going to be talking to Ray Dalio in just a little bit. He still talks, though, about the idea that the relationship has moved from cooperation to either competition or something much worse, confrontation. And so the question is this just a pause button on that? Or do you really think this is a demonstrable de-escalation that's fundamentally rewritten the rules of the relationship and that we're moving back towards cooperation again?
Well, I don't think it's a fundamental rewriting of the rules. This is a start to rewrite. There are other parts of the relationship that are much more fraught, if you will, basically in technology. Yeah. That's an area that crosses over into national security, right, and some other things. And so that's, the area of real friction. I think over time, in the trade area, it's in the interests of both countries to be in a more normalized position. And so I think the escalation made it clear to everyone this could be pretty unattractive, not just for the two countries. It's been slowing down or contributing to slow down to the global growth of the world, and that's not good either.
Steve, I was going to ask you about that because what you focused in on, I think, is one of the big key issues. Huawei, ZTE, some of the security issues that have been raised and concerns about that. I think that's a huge sticking point that continues to have big problems. We spoke with Stephen Mnuchin last week. He said that that's on a separate track. That's not going to be part of the trade negotiations. Ajit Pai from the FCC has told me that he is going forward with looking at them as a security risk. If that's the case, what kind of potential fallout does that risk? What kind of backfire could that mean for our American companies that sell technology there? And what does that mean even for other players in the region who don't want to be told you've got to choose between the United States and China, pick sides?
Well, the whole technology area with the start of China 2025, where at least the translation of the document talked about China wanting to dominate the world with all of the modern computer science-based technologies, really triggered a wake-up call for the United States and other countries, and so it's normal for China to want to develop by itself. It's normal for the U.S. That sort of has had the lead position in technology over my lifetime. To look at that with some trepidation, and these two countries are each moving forward.
To the point that you've invested money at MIT to make sure that the United States stays on top of
I'm American. But you also, I think we should, maintain an edge. But make no mistake, the Chinese are very capable now and are developing their own ecosphere to move forward ultimately in a more self-sufficient basis.
Steve, you've had a close relationship, really, I would say, with China and Blackstone, and you Schwarzman Scholars, and you've dealt with the CCP in a lot of different ways, and that's become more strained in the last couple of years, given the focus on the Uyghurs and human rights and Hong Kong and all these things again, to the point where even a speaker that you had for one of the events for the Schwarzman for the scholars, it came into all kinds of controversy. We've all benefited from our relationship with China. Are you looking at it, given recent events, and wondering how close you want to be to the CCP with some of their
actually not. The purpose of the program
is to try to open things
up, to facilitate sort of a dialogue.
It seems a lot more.
So as to our program, Joe, we haven't been affected, and we have a special status, in China, and China wants that connection with the outside world.
Do you think the connection, though, it's interesting because I've praised your program and I love your program in so many ways, but there now is a huge debate in the academic world here in the United States about whether we should have Chinese students, whether they're effectively stealing IP, whether the American students are going to be allowed to be in some of these Chinese institutions. How do you think that should work?
Well, I don't know that anybody has the answer to that one. That China going to the U.S., issues on research and knowledge transfer. There are about 370,000 Chinese students that come to the United States a year.
But do you think that the biggest academic and most successful academic, prestigious academic institutions in the United States should shut that down?
Well, it's interesting that
some of them are talking about it.
Yes, but they want to keep it open.
Right.
They make a lot of money.
Because they also have some terrific students that come from China, and they look at knowledge differently than we do in the commercial area. They view, academics view, the production of knowledge as a global commodity, building blocks for further developments of knowledge. And so their attitudes are much different than a company and much different than a country, actually.
But it almost reminds me of dealing with MBS at this point. I mean, organ harvesting, we had Kyle Bass on. You should hear the way he talks about the CCP, the Chinese Communist Party. And it's come into focus, and you've done a lot of business over the years with China. Is that going to continue, given that there's so much pressure for reform in a lot of areas where there hasn't been much progress?
Yeah, well, we're not a one-person, reform bureau. These are giant forces at work. There's a rebalancing of what's going on in the world. I mean, 40 years ago, China's GDP per capita was $300. Mm-hmm. You can't get much poorer than that. Now it's $10,000. Their GDP is somewhere around 14, 15 billion. Ours is 22. They're the second biggest country in the world. There's almost no one in third place. And so when you have these types of geopolitical changes, there are other things that go with it. I think in the future, there's going to be some type of spheres of influence and sort of a coexistence that's have to be done. There are a lot of positive things that these two countries, if they choose to act together, can do for the world.
Can we pivot to a moment, your take on investing, where we are right now? One of the questions I wanted to ask you specifically, and I'm doing a panel with David Solomon from Goldman Sachs in just a little bit about unicorn valuations, but the private market that you live in.
Yes.
There's a major question right now about whether all of these valuations for all these companies, not just technology companies, are actually inflated relative to where the public market is. What do you think?
Well, I think all markets have gone up pretty dramatically, over the last few years. I guess the S&P is somewhere around 19 times, and if you pay a premium to that, that's pretty high. It's partly justified by the prospect of continued growth, partly justified, by the fact that interest rates are so low.
But do you think that most of these private funds are marked up too high right now? Or do you think that when in fact people exit, they'll exit on par with what the marks look like?
I don't think the funds, Andrew, are marked up too high.
Okay.
Because you don't mark them up to exit, right? You have a cash flow model, and so those marks don't change dramatically. What changes is when you exit. And when you exit now, you're getting higher prices than you expect because everything is up. The more interesting issue is the issue of purchasing things now, because they're getting pretty expensive, and to buy something you have to see something reasonably remarkable in terms of your ability to improve the operations of a company.
Does that mean you're stepping back and not making purchases like you had been a few years ago?
Well, I wouldn't say stepping back. This is like a hockey game where you used to have 35 shots on goal of things you could buy. Now it's like 5. So you have much fewer things that are worth your time to analyze. That doesn't mean that those things won't happen, but your opportunity set is significantly reduced.
Is there more competition for those items too, just because of the liquidity around the globe right now?
There's always competition. I don't know that there's more. We're in the large end of the market. There have always been 7 to 10 competitors. The names change sometimes, but that hasn't dramatically changed.
As a billionaire, would you like to comment on any of Elizabeth Warren or Bernie Sanders' programs or prospects during the election? Just get on the record so we can get another fight started.
Well, Joe, it's always good to be here on a low-key type of topic. But this election is really pretty remarkable in terms of the differences on the Democratic side.
Let me make it complicated for you.
If it was
President Trump and your friend Michael Bloomberg.
Trump, yeah.
Michael Bloomberg
Who would you vote
and your
for?
friend President Trump. Both are friends.
Who'd you vote for?
Yeah,
Trump
well,
versus Bloomberg.
I'm a Republican,
Bloomberg used to be one.
He's flexible.
So is the president.
That's true too. I think the president's done a really good job with the economy. I think Mike is a really capable person and a longtime friend. And I think it's fascinating what's going on now with him showing up, with huge amounts of money to play the game out on Super Tuesday in March to see where he can get. There's all kinds of views of how successful he could be.
Would you like to see him succeed, just to mean that you've got two capitalists running against each other?
Well, you have, I don't think there's a lot of love lost on the Democratic side with the other candidates who've been out there for a year with Mike, who, has clearly got more operational experience running in New York, creating a great company. And, he's a very capable person. But the issue of him, showing up with all of these ads and so forth, I think, creates some dissonance with the other candidates and also with the media. So on the other hand, we'll see what happens. I anticipate that if he does really well on Super Tuesday, game goes on. If he does not do well, I would be surprised if he continues.
So, Andrew, what was the answer?
Quest.
Bloomberg or Trump? Could you glean?
Because I divined Trump still. My question, but this is my final question for you, though, is we're looking at a live shot right now, and the president's going to be speaking in a moment. Do you have any early intel on what he's going to be saying?
No, and it wouldn't matter anyhow, because he tends to change things.
Oh, when? Haven't seen that.
Haven't seen that one, Joe.
Yeah. Good. Steve, thank you. Thank you for the long interview. We appreciate
Thank you so very much. Hey, have a great Davos.
Good.
Thanks.
When we come back, we are awaiting President Trump's address to the World Economic Forum here in Davos. But when he begins speaking, we will make sure we bring it to you live. You're watching Squawk Box right here on CNBC.
Boredom, fitness enemy number one. So don't just run. Run, run, mix it up, skip, run, skip, run. Give yourself a lift, mix it up, lift, mix it up, run, lift, splash, skip, lift, run. It's crunch time, skip, mix it up, run, mix it out of boxing class. Skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run, mix it up, skip, mix it, run.
Mix it. I spy with my little eye something beginning with B.
Bike.
Nope. Banana tree.
Oh, of course. We must have missed it.
Although you might not be able to see it, your small actions can have a real impact with Shell. Drive carbon neutral by filling up and using Shell Go Plus today. Make the change. Drive carbon neutral. Shell. Go well. See goplus.shell.com/CO2 for details.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
What's your message to the senators at the trial, sir?
Okay, you can see President Trump has just arrived here in Davos at the Congress Center for the World Economic Forum meeting. They're shutting the doors as he goes backstage. He'll be speaking to the crowds here in just a few moments. Again, this is President Trump, who has just arrived in Davos, and this is the crowd that's awaiting that speech. This is the keynote speech for the beginning to kick things off here, and it's been met with much anticipation. You can see right now there's someone coming out to introduce the president. What he'll be speaking about is just about anybody's guess, but my speculation would be that it's probably not going to be along what you're hearing out of the meeting as some of their top priorities in terms of sustainability and climate change.
Right, it's a World Economic Forum. Hopefully he's going to, he will talk about the global economy, which I think is getting lost in what is really, I guess income inequality has been solved, so they've moved on from that over here, and now it's sustainability and ESG. But I would like to talk about the prospects for global growth. It looks like we're going to rebound in China. We're going to rebound in Europe. Interest rates are going to stay low. What are the prospects for inflation? I'd like to talk about all that stuff. I know what you want to talk about. We got to get to carbon neutral. As soon as we can. But it is the World Economic Forum. Let's talk about economies.
Well, that's the question. The question is, what's he going to say? Is he going to be talking about capitalism?
I think he's going to be talking about capitalism.
Is he going to be talking about?
Would you prefer he talk about socialism?
And then the question is Klaus Schwab going to be speaking with him after that?
He's got three questions.
Three questions, and the question is: given the focus on sustainability and climate here, is he going to ask him about that? How hard is he going to push him? I mean, I think these are the sort of interesting questions, and if there's any drama that you may or may not see.
Right. You got to walk the walk in Davos.
So first of all, remember President Obama never came here. So the person who was supposed to be the world's leader never came here. The fact that he's come here twice makes people here happy. They like stars. They like very important people. The other star of today is Greta Thunberg. Mm-hmm. So you have a 17-year-old competing for the stage with 73-year-old Donald Trump. And don't forget, they had a bit of a Twitter fight where he said that she should handle her anger management problems. I don't think he's going to talk about her in his speech. If he did, I think that would lose the message entirely. He will talk about growth. He will talk about trade deals. He will talk about how the world, in his view, and the United States, in his view, is better off than was 2 years ago.
I didn't properly introduce you, by the way. Fred Kemp is here from the Atlantic Council. We're thrilled to have you.
Great to be here.
Do a little color commentary as we hear from the president this morning. Where are you, by the way, on what Steve Schwarzman said just earlier about the relationship between the U.S. and China and what the Phase 1 deal means? He really suggested it was a demonstrable de-escalation between the two countries. By the way, sometimes, who was the person who was here on our set once that said that China was a great company masquerading as a country? Do you remember that? It was a great Davos line. Yeah. Barry Sternlicht. There you go.
So, look, this is a ceasefire. Hundreds of billions of tariffs are still in place. Phase 2, Steve Mnuchin was at the Wall Street Journal earlier today, and he was talking about Phase 2A, Phase 2B, Phase 2C. So they're talking about now solving things in little steps going forward. But the notion that you're going to have a big breakthrough, what you're really going to have is a generational systemic struggle between state capitalism and democratic capitalism. And hold on to your seats, because this isn't going to be solved in one mini trade deal. This is going on forever. And what you really see is a decoupling of the two economies. You see China deciding and telling its companies not to buy from U.S. if they can avoid it, whether it's LNG or whether it's software.
Are we the democratic capitalism or the state capitalism? I guess it depends on who gets elected in 2020, whether we're the state or the democratic.
I'd like to think we're the free market.
You would? Okay. For now.
But it's a real test, because the Soviet Union didn't have these capabilities. The Soviet Union wasn't this efficient. China is a peer competitor of the sort the United States has never had before. And so with all the focus on environment and everything else, I think a lot of people in Davos are watching this contest not only between two forms of capitalism, but also a lot of anti-capitalist rhetoric and fervor at the moment.
I was at a dinner last night that had about 45 or 50 people. The conversation around the table, nobody mentioned EEG or climate change for the first 2 hours until somebody said, hey, we haven't mentioned it yet, because most of the talk centered around China and the United States. And that battle, even though there seems to be a truce at this point, that battle will be playing out in a lot of different ways. And I think that's what people here are concerned about.
And for people's bottom lines, that's huge. Either you're a German or a French manufacturer who sees an opportunity in China because the U.S. is going to be pushed out, or you're an investor in the United States who sees opportunities because the Chinese are not going to.
But let me ask you about that. And I describe it as hypocrisy to some degree, which is to say that the theme here, everyone's talking about sustainability, right? You have Satya Nadella announcing programs. Larry Fink is here. He just announced his plans last week. Everybody's got a plan. And yet, I think you said you disagreed with the column I wrote this morning, but I think it's in line with what Becky heard last night at the dinner, which is the same thing I keep hearing, which is there seems to be a warming, more than an acceptance, almost an embrace of President Trump, based on the economic success of the country, and maybe the sustainability thing really is a sideshow.
The reason I disagree.
God, I can't believe what I'm hearing.
The reason
Andrew, I love you.
I'm just saying.
Thank you.
Well, in his column, you called President Trump the new Davos man.
I said, as anathema as it may sound to some participants, by the way, Everybody's been wrong. Everybody who was here 2 years ago thought that the economy was going to falter, everything was going to go down, and yet what's happened? It's been the opposite story.
And you know I've been a reasonable voice on this, and so I have been calling it.
By the way, I might have been an unreasonable voice on this.
But the fact of the matter is, you're right on the economy not going down. It's really hard to know where growth comes from in the next year. The majority of people think you've got a growth slowdown in 2020. I think the real issue on Trump, where Davos man has to be questioned, is he an internationalist in the sense that most people here are? Does he believe in international institutions, whether it's NATO or whether it's a WTO? Does he want to build them? Does he want to?
My suggestion is that whole construct has gone upside down.
And Macron is such a French nationalist, and President Xi is such a Chinese nationalist.
And Modi is an Indian nationalist.
We're all nationalists, but we want to work.
It's all changed, my friend.
So we have the 100th anniversary this week of the implementation of the Versailles Accords, end of World War I. At the end of World War I, we thought the world was safe for democracy. We thought the League of Nations were going to solve conflict. What did we have then? We had nationalism, we had populism, we had a resurgence of authoritarianism. So I'm not saying we're going to have a repetition of history, but by not paying attention to these real shifts that are taking place that could tear apart the system that's really served us so well the last 70 years. And so I think we need the president not just to push growth, but also to buck up the system that got us here. And I think that's the worry among the Davos-ites, if you can speak.
I think Trump wants to deal with China. I think he wants to open up the trade with China more than double what we've done in the past. I just think he wants it done on a fair.
But then he should bring Europeans with him. He should bring South Koreans.
Europeans too. But
he shouldn't be doing trade fights with those who should be his allies in taking on China. And he shouldn't have backed out of the Trans-Pacific Partnership.
Well, we already backed out of that. That wasn't him.
Right, but it's done. There is a deal with 11 countries that we could still rejoin if we wanted to.
We'll do some bilateral. We'll probably do something with Boris Johnson.
Gentlemen, let's
press the pause button because the president's here now.
Approaching the podium right now, being introduced by Klaus Schwab, who is the head of the World Economic Forum. Again, Donald Trump taking the stage here in Davos.
Congratulations on your 50th year hosting the annual meeting of the World Economic Forum, a truly amazing achievement. It's an honor to address the distinguished members of this organization for the second time as president. When I spoke at this forum 2 years ago, I told you that we had launched the Great American Comeback. Today, I'm proud to declare that the United States is in the midst of an economic boom, the likes of which the world has never seen before. We've regained our stride, rediscovered our spirit, and reawakened the powerful machinery of American enterprise. America is thriving, America is flourishing, and yes, America is winning again like never before. Just last week alone, the United States concluded 2 extraordinary trade deals. The agreement with China and the United States-Mexico-Canada agreement, the 2 biggest trade deals ever made. They just happened to get done in the same week. These agreements represent a new model of trade for the 21st century, agreements that are fair, reciprocal, and that prioritize the needs of workers and families. America's economic turnaround has been nothing short of spectacular. When I took office 3 years ago, America's economy was in a rather dismal state. Under the previous administration, nearly 200,000 manufacturing jobs had vanished. Wages were flat or falling. Almost 5 million more Americans had left the labor force than had gotten jobs, and more than 10 million people had been added to the food stamp rolls. The experts predicted a decade of very, very slow growth, or maybe even negative growth, high unemployment and a dwindling workforce, and very much a shrinking middle class. Millions of hardworking, ordinary citizens felt neglected, betrayed, forgotten. They were rapidly losing faith in the system. Before my presidency began, the outlook for many nations was bleak. Top economists warned of a protracted worldwide recession. The World Bank lowered its projections for global growth to a number that nobody wanted to even think about. Pessimism had taken root deep in the minds of leading thinkers, business leaders, and policymakers. Yet despite all of the cynics, I had never been more confident in America's future. I knew we were on the verge of a profound economic resurgence if we did things right. One that would generate a historic wave of investment, wage growth, and job creation. I knew that if we unleashed the potential of our people, if we cut taxes, slashed regulations, and we did that at a level that's never been done before in the history of our country in a short period of time, fixed broken trade deals and fully tapped American energy, that prosperity would come thundering back at a record speed. And that is exactly what we did, and that is exactly what happened. Since my election, America has gained over 7 million jobs, a number unthinkable. I wouldn't say it, I wouldn't talk about it, but that was a number that I had in mind. The projection was 2 million, we did 7, more than 3 times the government's own projections. The unemployment rate is now less than 3.5%, and at 3.5%, that's a number that is the lowest in more than 50 years. The average unemployment rate from my administration is the lowest for any U.S. president in recorded history. We started off with reasonably high rate. For the first time in decades, we are no longer simply concentrating wealth in the hands of a few. We're concentrating and creating the most inclusive economy ever to exist. We are lifting up Americans of every race, color, religion, and creed. Unemployment rates among African Americans, Hispanic Americans, and Asian Americans have all reached record lows. African American youth unemployment has reached the lowest it's ever been in the history of our country. African American poverty has plummeted to the lowest rate ever recorded. The unemployment rate for women reached the lowest level since 1953. And women now comprise a majority of the American workforce. That's for the first time. The unemployment rate for veterans has dropped to a record low. The unemployment rate for disabled Americans has reached an all-time record low. Workers without a high school diploma have achieved the lowest unemployment rate recorded in U.S. history. Wages are rising across the board, and those at the bottom of the income ladder are enjoying the percentage by far largest gains. Workers' wages are now growing faster than management wages. Earnings growth for the bottom 10% is outpacing the top 10%, something that has not happened. Paychecks for high school graduates are rising faster than for college graduates. Young Americans just entering the workforce are also sharing in America's extraordinary prosperity. Since I took office, more than 2 million millennials have gotten jobs, and their wages have grown by nearly 5% annually, a number that was unthinkable. Nobody would have ever thought it was possible 3 years ago. A record number of Americans between the ages of 25 and 34 are now working. In the 8 years before I took office, over 300,000 working-age people left the workforce. In just 3 years in my administration, 3.5 million people have joined the workforce. 10 million people have been lifted off welfare in less than 3 years. Celebrating the dignity of work is a fundamental pillar of our agenda. This is a blue-collar boom. Since my election, the net worth of the bottom half of wage earners has increased by plus 47%, 3 times faster than the increase for the top 1%. Real median household income is at the highest level ever recorded. The American dream is back, bigger, better, and stronger than ever before. No one is benefiting more than America's middle class. We have created 1.2 million manufacturing and construction jobs, a number also unthinkable. After losing 60,000 factories under the previous two administrations, hard to believe when you hear 60,000 factories. America has now gained, in a very short period of time, 12,000 new factories under my administration, and the number is going up rapidly. We'll be beating the 60,000 number that we lost, except these will be bigger, newer, and the latest. Years of economic stagnation have given way to a roaring geyser of opportunity. U.S. stock markets have soared by more than 50% since my election, adding more than $19 trillion to household wealth and boosting 401ks, pensions, and college savings accounts for millions of hardworking families. And these great numbers are many things, and it's despite the fact that the Fed has raised rates too fast and lowered them too slowly. And even now, as the United States is by far the strongest economic power in the world, it's not even close. It was going to be close. Things happen to us, and some not so good things happen to certain other places. They're forced to compete, and we compete with nations that are getting negative rates, something very new, meaning they get paid to borrow money, something that I could get used to very quickly. Love that. Got to pay back your loan? Oh, how much am I getting? Nevertheless, we still have the best numbers that we've had in so many different areas. It's a conservative approach, and we have a tremendous upside potential when all of the trade deals and the massive deregulation starts kicking in, which will be during this year, especially toward the end of the year. Those trade deals are starting to kick in already. The regulations are kicking in right now. And I see such tremendous potential for the future. We have not even started because the numbers we're talking about are massive. The time for skepticism is over. People are flowing back into our country. Coming back into our country. Many of you who I know are coming back in with your plants and your factories. Thank you very much. America's newfound prosperity is undeniable, unprecedented, and unmatched anywhere in the world. America achieved this stunning turnaround not by making minor changes to a handful of policies, but by adopting a whole new approach centered entirely on the well-being of the American worker. Every decision we make on taxes, trade, regulation, energy, immigration, education, and more is focused on improving the lives of everyday Americans. We are determined to create the highest standard of living that anyone can imagine. And right now, that's what we're doing for our workers, the highest in the world. And we're determined to ensure that the working and middle class reap the largest gains. A nation's highest duty is to its own citizens. Honoring this truth is the only way to build faith and confidence in the market system. Only when governments put their own citizens first will people be fully invested in their national futures. In the United States, we are building an economy that works for everyone, restoring the bonds of love and loyalty that unite citizens and powers nations. Today, I hold up the American model as an example to the world of a working system of free enterprise that will produce the most benefits for the most people in the 21st century and beyond. A pro-worker, pro-citizen, pro-family agenda demonstrates how a nation can thrive when its communities, its companies, its government, and its people work together for the good of the whole nation. As part of this new vision, we passed the largest package of tax cuts and reforms in American history. We doubled the child tax credit, benefiting 40 million American families and lifting 650,000 single mothers and their 1 million children out of poverty, and out of poverty quickly. We passed the first ever tax credit for employers who provide paid paternal leave for employees earning $72,000 or less annually, and passed paid family leave for government employees as a model for the country. We made child care much more affordable and reduced or eliminated child care wait lists all across the nation. Our child care reforms are supporting working parents and ensuring their children have access to high-quality care and education, all of which they very much deserve. We lowered our business tax from the highest in the developed world down to one that's not only competitive, but one of the lower taxes. We created nearly 9,000 opportunity zones in distressed communities where capital gains on long-term investments are now taxed at zero, and tremendous wealth is pouring into areas that for 100 years saw nothing. The 35 million Americans who live in these areas have already seen their home values rise by more than $22 billion. My administration has also made historic investments in historically black colleges and universities. I saved HBCUs. We saved them. They were going out, and we saved them. We're removing roadblocks to success and rewarding businesses that invest in workers, families, and communities. We've also launched the most ambitious campaign in history to reduce job-killing regulations. For every new regulation adopted, we are removing 8 old regulations, which will save an average of American households about $3,100 per year. It was going to be for everyone. We do 2, but we were able to lift that to 8, and we think that's going to go quite a bit higher. We still have a way to go. Today, I urge other nations to follow our example and liberate your citizens from the crushing weight of bureaucracy. With that, you have to run your own countries the way you want. We are also restoring the constitutional rule of law in America, which is essential to our economy, our liberty, and our future. And that's why we've appointed over 190 federal judges, a record, to interpret the law as written. 190 federal judges, think of that, and 2 Supreme Court judges. As a result of our efforts, investment is pouring into our country. In the first half of 2019, the United States attracted nearly 1/4 of all foreign direct investment in the world. Think of that. 25% of all foreign investment all over the world came into the United States, and that number is increasing rapidly. To every business looking for a place where they are free to invest, build, thrive, innovate, and succeed, there is no better place on earth than the United States. As a central part of our commitment to building an inclusive society, we established the National Council for the American Worker. We want every citizen, regardless of age or background, to have the cutting-edge skills to compete and succeed in tomorrow's workplace. This includes critical industries like artificial intelligence, quantum computing, and 5G. Under Ivanka's leadership, who's with us today, our pledge to America's workers has become a full-blown national movement with over 400 companies committing to provide new job and training opportunities to already very close to 15 million American students and workers. 15 million. America is making sweeping changes to place workers and their families at the center of our national agenda. Perhaps the most transformative change of all is on trade reform, where we're addressing chronic problems that have been ignored, tolerated, or enabled for decades. Our leaders did nothing about what happened to us on trade. Before I was elected, China's predatory practices were undermining trade for everyone. But no one did anything about it except allow it to keep getting worse and worse and worse. Under my leadership, America confronted the problem head on. Under our new Phase 1 agreement, Phase 2 is starting negotiations very shortly. China has agreed to substantially do things that they would not have done, measures to protect intellectual property, stop forced technology transfers, remove trade barriers and agricultural goods and on agricultural goods where We were treated so badly. Open its financial sector totally, that's done, and maintain a stable currency, all backed by very, very strong enforcement. Our relationship with China right now has probably never been better. We went through a very rough patch, but it's never, ever been better. My relationship with President Xi is an extraordinary one. He's for China, I'm for the U.S., but other than that, we love each other. Additionally, China will spend an additional $200 billion over 2 years on American services, agriculture and energy, and manufactured goods. So we'll be taking in excess of $200 billion, could be closer to $300 billion when it finishes. But these achievements would not have been possible without the implementation of tariffs, which we had to use, and we're using them on others too. And that is why most of our tariffs on China will remain in place during the Phase 2 negotiations. For the most part, the tariffs have been left, and we're being paid billions and billions of dollars a year as a country. As I mentioned earlier, we ended the NAFTA disaster, one of the worst trade deals ever made, not even close, and replaced it with the incredible new trade deal, the USMCA, that's Mexico and Canada. In the nearly 25 years after NAFTA, the United States lost 1 in 4 manufacturing jobs, including nearly 1 in 4 vehicle manufacturing jobs. It was an incentive to leave the country. The NAFTA agreement exemplified the decades-long failures of the international trading system. The agreement shifted wealth to the hands of a few, promoted massive outsourcing, drove down wages, and shuttered plants and factories by the thousands. The plants would leave our country, make the product, sell it into our country. We ended up with no jobs and no taxes. We'd buy other countries' product. That doesn't happen anymore. This is the wreckage that I was elected to clean up. It's probably the reason I ran for president more than any other thing, because I couldn't understand why we were losing all of these jobs to other countries at such a rapid rate. And it got worse and worse, and I think it's probably the primary reason that I ran, but there are other reasons also. And to replace with a new system that puts workers before the special interests, and the special interests will do just fine, but the workers come first. Our brand new USMCA is the result of the broadest coalition ever assembled for a trade agreement. Manufacturing, agriculture, and labor all strongly endorsed the deal. And as you know, it just passed in Congress overwhelmingly. It shows how to solve the 21st century challenge we all face, protecting intellectual property, expanding digital trade, reshoring lost jobs, and ensuring rising wages and living standards. The United States has also concluded a great new trade deal with Japan, approximately $40 billion, and completely renegotiated our deal with South Korea. We're also negotiating many other transactions with many other countries. And we look forward to negotiating a tremendous new deal with the United Kingdom. Have a wonderful new prime minister, wants very much to make a deal, as they say. To protect our security and our economy, we are also boldly embracing American energy independence. The United States is now by far the #1 producer of oil and natural gas anywhere in the world, by far. It's not even close. While many European countries struggle with crippling energy costs, the American energy revolution is saving American families $2,500 every year in lowering electric bills and numbers that people said couldn't happen. And also, very importantly, prices at the pump. We've been so successful that the United States no longer needs to import energy from hostile nations. With an abundance of American natural gas now available, our European allies no longer have to be vulnerable to unfriendly energy suppliers either. We urge our friends in Europe to use America's vast supply and achieve true energy security. With U.S. companies and researchers leading the way, we are on the threshold of virtually unlimited reserves of energy, including from traditional fuels, LNG, clean coal, next generation nuclear power, and gas hydrate technologies. At the same time, I'm proud to report the United States is among the cleanest air and drinking water on earth, and we're going to keep it that way. And we just came out with a report that at this moment, it's the cleanest it's been in the last 40 years. We're committed to conserving the majesty of God's creation and the natural beauty of our world. Today, I'm pleased to announce the United States will join 1 Trillion Trees initiative being launched here at the World Economic Forum. 1 trillion trees. And in doing so, we will continue to show strong leadership in restoring, growing, and better managing our trees and our forests. This is not a time for pessimism. This is a time for optimism. Fear and doubt is not a good thought process, because this is a time for tremendous hope and joy and optimism and action. But to embrace the possibilities of tomorrow, we must reject the perennial prophets of doom and their predictions of the apocalypse. They are the heirs of yesterday's foolish fortune tellers, and I have them, and you have them, and we all have them. And they want to see us do badly, but we don't let that happen. They predicted an overpopulation crisis in the 1960s, mass starvation in the 70s, and an end of oil in the 1990s. These alarmists always demand the same thing: absolute power to dominate, transform, and control every aspect of our lives. We will never let radical socialists destroy our economy, wreck our country, or eradicate our liberty. America will always be the proud, strong, and unyielding bastion of freedom. In America, we understand what the pessimists refuse to see: that a growing and vibrant market economy focused on the future lifts the human spirit and excites creativity, strong enough to overcome any challenge by far. The great scientific breakthroughs of the 20th century, from penicillin to high-yield wheat to modern transportation and breakthrough vaccines, have lifted living standards and saved billions of lives around the world, and we're continuing to work on things that you'll be hearing about in the near future, that even today, sitting here right now, you wouldn't believe it's possible, that we have found the answers. You'll be hearing about it, but we have found answers to things that people said would not be possible, certainly not in a very short period of time. But the wonders of the last century will pale in comparison to what today's young innovators will achieve, because they are doing things that nobody thought even feasible to begin. We continue to embrace technology, not to shun it. When people are free to innovate, millions will live longer, happier, healthier lives. For 3 years now, America has shown the world that the path to a prosperous future begins with putting workers first, choosing growth, and freeing entrepreneurs to bring their dreams to life. For anyone who doubts what is possible in the future, we need only look at the towering achievements of the past. Only a few hundred miles from here are some of the great cities of Europe, teeming centers of commerce and culture. Each of them is full of reminders of what human drive and imagination can achieve. Centuries ago, at the time of the Renaissance, skilled craftsmen and laborers looked upwards and built the structures that still touch the human heart. To this day, some of the greatest structures in the world have been built hundreds of years ago. In Italy, the citizens once started construction on what would be a 140-year project, the Duomo of Florence. Incredible place. While the technology did not yet exist to complete their design, city fathers forged ahead anyway, certain that they would figure it out someday. These citizens of Florence did not accept limits to their high aspirations. And so the Great Dome was finally built. In France, another century-long project continues to hold such a grip on our hearts and our souls that even 800 years after its construction, when the Cathedral of Notre Dame was engulfed in flames last year, such a sad sight to watch, unbelievable sight, especially for those of us that considered it one of the great monuments and representing so many different things. The whole world grieved. Through her sanctuary now stands scorched and charred, and a sight that's hard to believe. When you got used to it, to look at it now, hard to believe. But we know that Notre Dame will be restored magnificently. The great bells will once again ring out for all to hear, giving glory to God and filling millions with wonder and awe. The cathedrals of Europe teach us to pursue big dreams, daring adventures, and unbridled ambitions. They urge us to consider not only what we build today, but what we will endure long after we are gone. They testify to the power of ordinary people to realize extraordinary achievements when united by a grand and noble purpose. So together we must go forward with confidence, determination, and vision. We must not be timid or meek or fearful, but instead we must boldly seize the day and embrace the moment. We have so many great leaders in this room, not only business leaders, but leaders of nations. And some are doing such a fantastic job. We work together very closely. We will draw strength from the glories of the past, and we will make greatness our common mission for the future. Together we will make our nations stronger, our countries safer, our culture richer, our people freer, and the world more beautiful than ever before. Above all else, we will forever be loyal to our workers, our citizens, and our families, the men and women who are the backbone of our economies, the heart of our communities, and the soul of our countries. Let us bring light to their lives one by one and empower them to light up the world. Thank you very much. God bless you. God bless your countries, and God bless America. Thank you. Thank you very much.
That's President Trump here at the World Economic Forum. He'd been speaking, going through, talking about the economic resurgence that we've seen in the United States and around the globe. He talked about how he cut taxes, slashed regulations, did trade deals in the United States. It's a big part of the reason why he says the economic resurgence has come. It sounds like Klaus Schwab
is going to be asking a handful of questions.
Potentially a handful of questions on this. I don't know if we can hear what's going on there.
What happened? They try to bring
so
bring the sound back.
They are aiming to create better inclusiveness for the American people. I want to thank you personally, particularly for injecting optimism into our discussions. We have many problems in the world, but I think we need, as you said, we need dreams. And we have all the capabilities, technology, leadership to realize those dreams. So thank you again, Mr. President, for having joined us here at the opening of the 50th anniversary of the World Economic Forum.
All right, that's, again, Klaus Schwab and President Trump, who just finished speaking here, talking about, again, the global economy and what he's seen here. Joining us right now for reaction to this and much more is Cisco's CEO and chairman, Chuck Robbins. Chuck, it's great to see you today.
It's good to be here.
So the president's speech focused largely on the economic resurgence taking place in the United States and around the globe. What do you see of that from Cisco's dealings?
Well, I think, first of all, you can't argue with the economic performance of the U.S. over the last couple of years, and obviously it's reflected in the markets. And we're super optimistic about the trade deals that have been done here in the last week or so. We think that those reducing that uncertainty and taking that out will actually help. I think we've also seen other indicators that outside the U.S. is a little more sluggish. And so, it's a bit mixed, as we talked about on our last earnings call.
Is it reducing uncertainty and getting back to the status quo, or is it reducing uncertainty and moving the ball down the field based on our dealings with China and with Canada and Mexico?
I think that both of those deals were necessary and additive.
Okay.
Absolutely.
What does it mean, though, to your business, given the technology issues related to China and IP issues?
Well, this particular deal probably won't have a great deal of bearing on our business. But I think that it sets a stage and continues to move us forward so that there's a comprehensive deal brought forward with phase 2. And I think that both sides...
How do you handicap that component? Because that really is the thing that would impact your business.
Well, I think protecting intellectual property is super important. It's not only important in China, it's important in the United States. I mean, our last 2 major intellectual property challenges have been in the United States, not in China. And I will have to say that we had, week before last, China actually sentenced some counterfeiters who were part of the biggest counterfeit situation we've ever seen in China. So they've been working really closely with us on trying to do the right thing. So we're optimistic.
China itself makes up a very small part of your revenue. I know last year it was 3 to 4%, but it's shrunk since then.
Yeah, our business over there, as we've been talking about, has been declining for the last 4 to 6 quarters in the midst of all this geopolitical dynamics. So it's not a big surprise.
You did talk on your conference call back in November about the hesitancy from some big customers, and that was because of global uncertainties. What are those customers seeing, and do you think that those customers would be impacted by the signing of this trade deal if it looks like tensions are dying down between the 2 nations?
Look, I think there's a couple things going on. Number one, this first phase is definitely really good for lots of American companies. The financial institutions, really good. But I think from a broader macro perspective, reducing the geopolitical uncertainty around these 2 trade deals will have a positive impact on people's perspective on whether they spend or not. I do believe that.
Just because it's the 2 largest economies in the globe, and when those 2 fight, it causes a problem everywhere. One of the initiatives that you all are starting to do now is take chips that you make and allow others to use them. And that's a really interesting change for Cisco. What got you to that point? Why are you doing that now?
Well, when I became CEO, I said we're going to sell our technology to our customers however they want to consume it. And we have had customers ask us to disaggregate our software from our hardware and just sell them the software. We've had customers ask us, just sell us the hardware without your software. And we've had customers that say, we'd like to buy your silicon and build our own products. And so we've worked over the last few years to actually put ourselves in a position to do that. And we just announced it recently, and it was very well received.
Does it highlight the legacy business is not what it used to be at Cisco, and you need to transform it to some extent to become a big player in the cloud? They're putting their own systems together and not using Cisco as much, right?
Well, there's not one answer for what they're all doing, because some of them are still buying systems from us. Some of them are buying components and buying their own products. Some of them are running their software on our hardware. Some of them are running our software on their hardware. So we're just accommodating all the different
business isn't growing, though, is it?
Well, our software business is growing significantly now.
Right.
And if you go back to FY19, we had a really good year across the board with a lot of growth across our core franchises like switching, et cetera. But we've been transitioning even our core platforms to one that has subscription software businesses on top of it, and that's what we're seeing.
When you look on a whiteboard of your competitors and also your customers, some of them are now on in both categories. So there's this frenemy situation. You look at AWS from Amazon, for example, where they're both a competitor of some sort, but also a customer, right? And so how do you look at that?
Yeah, first of all, I don't consider Amazon a competitor to us really in any way. I mean,
but they're doing some of their own hardware now
for their own use, to some extent. Yeah, but your point is very
And
valid.
by the way, once they start doing their own hardware for themselves, don't you say to yourself, 2-3 years out, they'll start trying to sell that hardware to others?
Well, they may. Right. I've talked to Andy about this a lot, and so far,
Andy Jassy, right?
Look, I think the point you're making is correct. I actually was talking to one of our other customers today about they faced the same thing. The world's complicated, and we're going to have partners who are customers, they're partners, they're competitors, and that's just the world we live in today.
In terms of the security issue that still exists between the United States and Huawei, that was not resolved in these trade talks. The administration is signaling right now, at least, that will be done separately. It won't be wrapped into economic talks that come with these. But I just wonder if that causes a problem for you or blowback as countries around the world are asked to take sides. Are you choosing the U.S. or are you choosing China to go with? Countries that are at least in China's sphere that are nearby, I think, don't want to be asked to choose between the two.
Well, I think countries would prefer to have an open set of options and just navigate that. And I think every country right now has to determine the level of trust that they have across the board, whether it's Ericsson, Nokia, Cisco, Microsoft, it comes down to trust. Mm-hmm. And I think that's what all the countries have to think through right now. They're going through all of their different initiatives to actually ascertain their belief in that area, and then I think we'll see where it goes from there.
Has it created a problem, though? Have you seen any ripples coming back from that to this extent, or is it's not something that's
to be honest, we haven't seen any real move. I get asked a lot, like, have you seen a positive bump in your business in certain places? Yeah. We haven't seen a lot of activity. I think people around the world are still trying to figure out what exactly does this mean, and what does it mean. What should I be doing, and what should I be thinking about doing, or what should my country be thinking about doing? And I don't think there's a whole lot of action that's been taken.
So it's a little too soon to say confidence is on the rise because we've sorted this all out.
Well, it just happened last week. So.
Yeah, so we're still trying to figure these things.
Since it happened, I flew here. So.
What do you worry about, Chuck? What when you look around the globe right now, are you feeling better about things, or are you more worried, just in terms of the economy or other things that might be popping up?
I actually feel good about it right now because I think there were a few dynamics that were creating some uncertainty, like the trade situation, like Brexit, that all seem to be coming to resolution. Mm-hmm. And once the uncertainty's passed, I think that for us, our customers believe that this technology is at the heart of everything about their strategy going forward. So when we look at our pipeline and we look at the deal work and the activity with our customers, it's not like falling off a cliff. Sure. We just saw this slight pause. And I think once some of this uncertainty gets clarified, which we're starting to see, I think we'll see a pickup.
11-year expansion. I mean, it's like unheard of.
It is.
I hate the words, it's different this time, but no one ever had any idea about computing power and AI and the gig economy and inflation being basically, I don't know whether it's vanquished or not, but with all this technology, they talk about the singularity occurring in 25 years, whatever it is, but each year these advances are becoming shorter and greater. Is the business cycle not something we need to think about anymore? Can this go on another 5-10 years?
It could. We've talked about that. When I've been asked about downturns, I've said, given the strategic play that technology has and our technology has with our customers now relative to everything they're doing about the future, then how long can they afford to pause? How long will they be able to? So I do think it's different this time.
Dangerous to say that we've ended business cycles and it's an endless expansion.
Well, I don't know. I'd say that. I think it's more we don't actually know what they're going to look like in the future right now. And the last 11 years have been different, for sure.
You heard the president talking about optimism. Davos could use some optimism this year, I think, given Greta is here. I mean, she's
on climate. Well, also you had the IMF who reduced their growth rates.
That's right. That I
saw that come in just happened yesterday on our way in here.
I guess it's still sooner or later we're all dead, Chuck. I guess we got to come back to that, don't we? But we can be optimistic in the meantime.
We can be. We can be. I'm the ultimate optimist. I always am. Most of us here are. Most of the CEOs here are optimistic. And
if I was making the money they're making, I'd be optimistic too. But
Chuck, I want to thank you.
Now that we've solved income inequality.
All right.
Chuck, I want to thank you very much for joining us today. Chuck Robbins, who is the head of Cisco.
All right, coming up, Citi CEO Michael Corbat joins us with his take on the Fed interest rates and how it's all affecting the bank's bottom line. We'll be back. Plus, National Economic Council Director Larry Kudlow. Wonder if he's going to be optimistic. He's going to join us in about an hour from now to talk about the next challenge for trade and the U.S. economy. Rockbox Live from Davos returns in a moment.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Some ideas can be bad for business, like a band recording a song underwater. No radio station would ever play that song. Or like Barclaycard, making a repayment calculator that shows how a small extra repayment each month adds up to paying them much less in interest. But Barclaycard have actually made their repayment calculator, so you should definitely use it. Take control. Start today. Barclaycard. Terms and conditions apply.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. At all protected.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
President Trump speaking to the World Economic Forum just minutes ago, and here's what he said about the economy and the Fed.
These great numbers are many things, and it's despite the fact that the Fed has raised rates too fast and lowered them too slowly.
Michael Corbat is here, CEO of Citi. I still call it Citigroup. Is that anachronistic?
Yes, and so are you.
Old. I like the sound of Citigroup. It sounds big to me. Anyway, last year was good for everybody in terms of stock prices in the banking sector. I think there's still some type of overhang about the future that affects valuations for banks. Is it yield curve related? Is it a hangover from the financial crisis? Is it too much debt in the system?
Well, I think, Joe, if you think back a year ago when we were sitting here, the market was giving us strange signals. We talked about the fact what we were seeing was a consumer completely engaged, and yet markets giving a prediction of a fairly high likelihood of recession. So going through 19, overhang of China trade, USMCA, of Brexit, kind of all of those things there. And I think in spite of that, the banking industry, and in particular Citi, I think had a very solid year.
I remember one year, you remember recently, we actually have our own history now, yes, where everybody's really happy, and 6 weeks later, it's hitting the fan.
Remember,
like you can't
it was
believe.
it was the year that when Trump was here,
2 years ago,
2 years ago, 2018. People, were smiling in ways that they hadn't in years.
Yeah, but if you remember,
sometimes it goes the opposite of what I think people are. The president just expressed some optimism. there is a backdrop of optimism here, in spite of worries about sustainability and income inequality and everything else. But things are better right now. And I wonder, can we throw away that yield curve in the signals that it gives? It's forecast 10 out of the last 3 recessions.
You know, I think when you go back and you know, I share that history with you. I remember being here in early 2016 when the world was coming to an end. Oil broken $30 a barrel. Hard landing in China, fears of recession in the U.S., and 6 months later we're at new highs.
So are we a lagging indicator? Yes. Is this the wrong? Is it counter to whatever the view is when we leave? You should go do the opposite.
You know, I think as we come into this year, we've got, again, the backbone of this recovery, 11, 12 years in, has been the consumer. And when you look at what matters to the consumer, it's jobs, it's employment, strong, 30-year strong backdrop to that, and housing. 2 most important things to a consumer. So the consumer remains there. And now, maybe if we get some of these clouds that were there on trade and some of the other things I mentioned, it maybe starts to change some of that backdrop. And again, when you look at the growth prognostications coming out while we're here, 3.3% global growth, down from a 3.4 prediction, but up from 2.9 for the year.
Right.
So that's not horrible. And if you get some of these clouds to clear, I think there's still runway left here.
One of the worries that I've seen expressed, and it's a worry du jour, is that central bankers around the world are actually don't think inflation is ever coming back, and they're going to let it run hot, too hot, given the size of the debt that we see in the government and the private sector. And if it runs too hot, eventually you pay the piper, and that's going to be the next problem.
It could be. But, you know, if you look at the challenges we had coming out of the crisis, we went at unemployment globally, fixed. We went at housing prices in many places, fixed. And the thing that's been out there that's been the toughest is to get inflation back. I think we got to be careful what we wish for. But, you know, inflation has been the challenge, and the lack. That
might be technology too, in a good way. Why inflation?
So we always talk baseball innings. Where are we then?
Again, you know, as I remind everybody, my friends in Australia are 27, 28 years into their recovery. Right. You know, economic cycles really have no memory. And again, it's dangerous, and I'm not necessarily arguing this, but there are aspects of this that are different in terms of, as you mentioned, Joe, central bank policy that's been, you know, at work for over a decade.
Mike, you move money around the globe for big businesses. We've talked a lot about CEO confidence and how that had been under some pressure last year. Maybe the trade deal being signed relieves a lot of that concern. I just wonder, have you seen any of that with the money that you move for companies to this point?
I think it's early in the year, Becky, and so what comes out is we've all gone through our planning process, and the conversations that I've had, you know, a year ago, I talked publicly about the fact that we as a company planned 2 scenarios. We planned for a fairly benign scenario, which we got, and we planned to a much darker scenario, which fortunately didn't occur. I don't necessarily see companies today having that mindset of something ominous looming out there. But again, I think as you know, we talked about, there is a conservatism just around how long this cycle has gone on.
You think we have fiscal policy right now? Do you think we're, if they ask you the question, are you optimistic about the economy and the policies of the current administration? Have we got that right? Is there a risk to 2020 to not continuing those policies?
You know, I think, you know, when you look at, rather than just make it U.S., I'll make it global. One of the things that's happened is, you know, we've obviously become very reliant on monetary policy. And in general, in my opinion, we've seen a follow through from the fiscal side in terms of entitlement reforms and creating sustainability. And the challenge you get when you get to where we are in monetary policy of low rates or negative rates, governmental balance sheets being called into question, and a lack of the creation of fiscal sustainability, it creates vulnerabilities. And I think there are vulnerabilities.
Is income inequality, we've talked about again and again and again here in Davos, that down the road it's going to be a problem for society. Are some of the gains we're seeing at the low end that are coming organically from growth, will that at least allay some of that worry, or we still need to, we need to raise taxes? Do we need to narrow that gap somehow?
Well, we've got to work on the gap, because part of the challenge of quantitative easing is that gap naturally widens. Right. Because those people that own assets their assets appreciate. Those people that own assets typically have access to borrowing at cheap levels of money, and that income divide widens. And by the way, I don't see loose monetary policy going away for a while.
Yeah, that's a problem. All right, we can worry about that. I'm looking for something to worry about. I don't want to be. I'm nervous.
It's hard to be in Davos and not worry, right? That's always usually.
Yeah.
Okay, Mike. Thank you. Great to see you. Appreciate it. When we come back, a lot more on Squawk Box Live from Davos. We've got Verizon betting big on a next generation wireless technology. 5G it is. CEO Hans Vosberg is going to be here to discuss the company's 5G strategy. And a reminder, you can always watch us live. You can do it right this minute if you want. You're headed to the office or elsewhere on the CNBC app. We're right back from Davos, Switzerland.
I believe ETFs are boredom, fitness enemy number one. So don't just run. Mix it up, skip, run. Give yourself a lift, mix it up, lift, mix it up, run, lift, splash, skip, lift, run. It's crunch time. Skip, mix it up, run, mix it out of boxing class. Skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run, mix it up, skip, mix it, run. Mix it.
Hello, I'm your captain for today's Virgin Atlantic flight. Please drop everything and pay close attention to the following announcement. The sail is now on. Our crew are ready to take your bags and stresses away. The cocktails are ready to serve, the movies are loaded, and we're all set for takeoff to the Caribbean. So, take your seat in our award-winning economy class. We're ready to go when you are.
The Virgin Atlantic sail. Fly amazing for less. For more details, visit virginatlantic.com.
You're 169 in the queue.
I proposed on the 169. She got for the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of March 2020. £3,311.25p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
The Sky Broadband sale ends soon. Get a massive 30% off superfast broadband and anytime calls. It's now just £25 a month for 18 months, so you can stream, share, play or tweet in the living room, bedroom, hey, any room you like. It's usually £37 a month, but now it's just £25 a month for 18 months plus £19.95 setup. So what are you waiting for? Offer ends 6th of Feb. Visit sky.com today. Sky Fibre network areas. Speeds vary by location. Prices may change during contract terms apply.
Heroes. They're the ones we turn to in our darkest hour. Like when you blow a fuse and the lights go off. Whether it's electrics to heating, plumbing to plastering. At Local Heroes, every job completed by an expert tradesperson comes with a 12-month British Gas guarantee when you pay online. So, if it needs fixing, there's a local hero for that. To get a quote, search Local Heroes. Terms and conditions apply.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Welcome back to a special edition of Squawk Box. We are in Davos, Switzerland for the World Economic Forum. The next big move in telecom is the rollout of 5G networks. Joining us right now is the head of one of the companies at the forefront of this move in technology, Hans Vosberg, who's the CEO of Verizon. And Hans, it's great to see you today.
Great seeing you guys.
So let's talk a little bit about 5G. That's a huge initiative for you all. You are spending lots of money. What's your CapEx expected to be this year?
We have not guided yet, but last year we had a guidance between 17 to 18 billion US dollars, and we have not reported yet. But we see that trend continue, and that has been sort of the levels we've been on to for the last couple of years. We have both done a lot of efficiency in our capex because we're building in the network in a new way. So we fit in everything. We do a lot of fiber, we do a lot of 4G, we do a lot of 5G, so we do all in once in that envelope.
You've announced some new cities that you're going to be rolling into 5G in the United States for this year. What can you tell us about where the plan stands, how long it's going to take you to get up to speed to have, I guess, half the network?
When it comes to the 5G, we have several different businesses. On the mobility case, we launched 31 cities last year, 17 NFL stadiums, and a couple of arenas that plays ice hockey and basketball. We have not said how much we're going to do in 2020 yet. We will do that a little bit later on. But you can see that we continue on this pace. We think it's important. We are on a good move when it comes to our deployment, our technology. And we are early on, of course, we're taking a little bit of that brunt, but we think it's important for our customer to get the best network, but also being first.
But can you speak to this? So there's an expectation that come this fall, Apple's going to come out with its new iPhone. Everybody thinks it's going to be the next 5G edition. That this whole sort of cycle is about to take place. And the question I have really is when we think the customer adoption is genuinely going to happen. Is it really this year? Is it really 2021? Is it 2022 when people actually make the move because the network and the hardware is good enough?
I think that, first of all, it's an important event whenever Apple will come out with a 5G phone because given the market share they have in the US, that's going to be important. I think that you need to remember 4G as well. I mean, this is going gradually. I mean, people don't change phones immediately and it goes over time. We have said that we will see some impact on our revenues 2021 from the mobility case. So it takes some time. And remember, we have 120 million mobile customers. It's going to take some time. It did it on 4G. The expectation from external sources is that 2024, half of the US population will have bought a 5G phone. That's the expectation externally. So that's how long it takes in these cycles.
What's it internally?
That's another thing. But if you do it well, you can probably do it better. But let's see.
When you say it will impact revenue, meaning what?
Meaning that it will have starting to gradually be seen on our revenue line because we have a pretty big revenue. So you need to be there and you need to get some certain amount of customers before you see an impact. We have been out with 5G for almost over 1 year right now, but again, it's in the beginning, so you don't see an impact on our revenue line.
Let me ask you about streaming services. Disney Plus and the deal that you did with them so that subscribers can get a free year when they sign up for one of your services. Is that driving a lot of enthusiasm? Did that mean
I have
more
to say
subscribers?
A lot of enthusiasm. And again, we build a network as a service strategy, so we can work with anyone. We do it exclusively. We think we come with the best brand, the best distribution. We're touching more consumers than anyone else in the market. And we have the best network. We can partner with Disney Plus, and they get the win-win. We get the win-win for our customers. So we learned that from the Apple Music, where we did the same thing. We know how many of our customers that would take the free service, and then later on will actually be a paying customer. So that is all baked into the win-win we're doing with Disney Plus. They talk about the numbers. We've agreed upon that. I think we're very happy with the development we have seen on our side since we launched it a couple of months ago.
Meaning subscriber growth, because people are drawn to this.
No, meaning people taking Disney Plus, and of course it creates both loyalty but also growth.
What's your assessment of what's happening at your biggest competitor, AT&T, the acquisition of Time Warner? They're going to be rolling out HBO Max. What do you think that's doing to your ability to compete with them to the extent that the whole theme and concept of that transaction was to both avoid churn but actually be able to get new customers because they'd be able to offer these other streaming services?
You know, first of all, I have a great lot of respect for my competitors. Every one of us take different ways in our strategy. Verizon decided we're not going to go into the content. We believe we have the best network. We can grow from there. We can satisfy our customers, our shareholders, employees, and our society with those four. AT&T has obviously taken another way. So that's their way to do it. I have no insight to how they're thinking, etc. I'm just respecting that we will have different strategies.
But in terms of your ability to pick off their customers or their ability to pick off your customers, I have to imagine you have tried to assess that.
Of course. I mean, you always assess what is happening in a competitive landscape. We feel good about our positioning. We feel good about it. I give optionality for my customers. I just came out with optionality on the cable offering where you can start to mix and match your channels, not taking only 580 channels. I have that optionality because I'm not sitting with the content. We feel good about our strategy.
And that's making sure the consumer gets what the consumer
Exactly.
wants.
Because ultimately, all content owners today, they go to a streaming service. So for obvious reason, everybody sees what I'm seeing, that the next generation will actually consume a lot of streaming, a little bit less of linear, and then you need to give them the optionality. Verizon have that optionality. That's what we did with Disney Plus. That's what we're doing with the mix and match on Fios that we're doing right now. It's just listening to the customers.
Okay, what comes first? I get a 5G phone or I fly on a 737 MAX?
5G phone.
Wow.
There's several already out.
Right.
There's several Samsung 5G.
That was really a Boeing question.
So the question was a given because they're already out.
Will you do?
But you won't hook me. Hold on. But you won't hook me up now.
We have to do some home game business. Will you do a distribution deal with Peacock?
No, not yet. At least we're not announced anything. Right. But we're open to discuss with anyone in the market. So let's see.
Okay.
Is it in settings? Where do I do 5G? Is it? We're
in Switzerland, and there's limited deployment here in Switzerland so far. So I think that the 5G roaming is not there yet, meaning that you can roam between different networks. It will be there in a couple of Davos. I promise you.
Okay. Hans, thank you very much. Hans Vestberg with Verizon. When we come back, legendary investor Ray Dalio will join us, and we heard from President Trump earlier this morning. Next hour, National Economic Council Director Larry Kudlow will be our special guest. Lots more to come from Squawk Box in Davos. Stick around. We'll be right back.
Don't forget to subscribe to our podcast. You'll get interviews, original content, and behind-the-scenes access. Look for us on Apple Podcasts or on your favorite podcast app. And subscribe to Squawk Pod today.
Boredom, fitness enemy number one. So don't just run. Run. Mix it up. Skip. Run. Skip. Run. Give yourself a lift. Mix it up. Lift. Mix it up. Run. Lift. Splash. Skip. Lift. Run. It's crunch time. Skip. Mix it up. Run. Mix it out of boxing class. Skip. Run. Splash. Skip. Run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run. Mix it up. Skip. Mix it. Run.
Mix it. Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Pascal gobbles up the rebound and slams it down. Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
On the goal line, scores and takes it home.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
Hear the action live on TuneIn Premium.
Gonna move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right? Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
On this week's On the Media, we peel away the many layers of the Warren Sanders sexism sideshow.
The first layer is, can we acknowledge that in a country that has only elected male presidents throughout its history, that gender is a factor?
Also, depressed by politics? We have a plan for that. Listen to On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
Coming up, another big hour ahead. Bridgewater's Ray Dalio, hedge fund manager Paul Tudor Jones, and General Atlantic's Bill Ford will all be with us. We're talking business, trade, investing, and we're going to be really woke for a couple of these. But this is with some of the world's brightest minds. Plus, National Economic Council Director Larry Kudlow sees some good things in the U.S. economy, apparently. He's going to join us at 7:30 a.m. Eastern Time. More Squawk Box and Davos is straight ahead.
Dana-Farber Cancer Institute.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Discover the PD-L1 pathway.
PD-L1.
They change how the world fights cancer.
Blocking the PD-L1 protein
Lets the immune system attack cancer.
PD-L1 transformed.
Revolutionize.
Immunotherapy.
PD-L1 saved my life.
Saved my life.
What we do here at Dana-Farber changes lives
Everywhere.
Exploring the heart of historic Europe with Viking, you'll get closer to iconic landmarks, to local life and legendary treasures as you sail on board our patented, award-winning Viking longships. You'll enjoy many extras, including Wi-Fi, cultural enrichment from ship to shore, and engaging excursions. Viking, voted #1 river cruise line by Condé Nast readers. Learn more at vikingcruises.com.
Whether your beauty routine is 3 steps or 57, make Nature's Bounty Hair, Skin, and Nails Step 1. It's the #1 brand uniquely formulated for silky hair, glowing skin, and healthy nails. Nature's Bounty, because you're better off healthy.
I found a way to relieve my constipation that's both gentle and fast. Delcolax liquid works naturally with the water in my body to provide gentle relief in as little as 30 minutes. Stimulant-free Delcolax liquid puts you comfortably in control.
Who says our bank isn't tech enough? Everybody look at your phones. The design thinking, digital engineering, security, blockchain, and we will be first to market. Yes.
When do we launch?
Unfortunately, in 2 or 3 hours.
Why the delay?
Cognizant is helping banks use digital technologies at scale to advance speed to market.
Halftime Report. Weekdays noon Eastern on CNBC. Live from the World Economic Forum in Davos. Perspectives on global economic challenges facing leaders and investors. Squawk on the Street, 9 a.m. Eastern today.
A golf course is designed to be difficult, to challenge your thinking and test your execution. But great minds are driven to seek out the complex. They see what others don't, from an angle others won't take. They learn that embracing those challenges is what sets them apart. I am Justin Rose, and we are Morgan Stanley.
This limited commercial half hour, live from Davos, is made possible by Morgan Stanley. The heads of some of the world's biggest companies are here in Davos talking business.
We're super optimistic about the trade deals that have been done here in the last week or so.
Well, if you get some of these clouds to clear, I think there's still runway left here.
This hour, influential investors, Bridgewater's Ray Dalio, and Tudor Investments' Paul Tudor Jones talk about the record rally and where they're hoping to find the biggest returns. This is a special edition of Squawk Box in Davos.
Squawk Box right here on CNBC this morning. I'm Andrew Ross Sorkin along with Becky Quick and Joe Kernan. This is our Super Bowl for the world of politics and business. U.S. equity futures at this hour. Let's take a look at where things stand right now after where we were. It was a record before, but we look like we're going to have a lower open this morning. Dow looking like it would open down about 77 points. NASDAQ off about 48 points, and the S&P 500 off about 14 points, which is better than where we stood before after this 3-day weekend.
Let's get you caught up on the three big stories that we're following this morning. First up, among the factors weighing on the world markets, you've got a new virus originating in China. It's already taken 4 lives and sickened more than 200 people. Also, Boeing is seeking to borrow $10 billion to help deal with the cost of the 737 MAX grounding. Sources tell CNBC that Boeing already has arranged $6 billion in loans and is talking to others for the rest of that amount. And the International Monetary Fund has cut its global growth forecast for this year. The primary drag, sharper than expected slowdowns in emerging markets.
And this morning, we are joined by Ray Dalio. He, of course, has been has been critical of the nation's financial system, pointing to the wealth gap he's talked about, printing of money and monetary policy, and now is expecting higher inflation. I hope we got that right here right now in Davos. No, you're nodding your head in the wrong direction.
Yeah, let me clear what I'm saying. We're in a spot in monetary policy where you can no longer stimulate the same way you did before. You used to push a button and go, and it would go up. And as we get down closer to zero interest rates and quantitative easing, it's very much like other periods of time, so it's not that particular stimulation. So we're going to have larger deficits, which we're going to print money for. And so that will be the case. That doesn't necessarily mean an acceleration of inflation. Like in the 1930s, they printed a lot of money. Right. But it produces an inflation in financial assets. So the way it works is they print money, they buy a bond, they give it to the seller of the bond, and they buy other financial assets. So it's not necessarily that. But at a point in the future, we still are going to think about what's a storehold of wealth. Because when you get negative yielding bonds or something, you're approaching a limit. We are approaching a limit that will be a paradigm shift, I think.
Okay, I want to get to that and more in just a minute, but I want to get your reaction. The President Trump, just speaking here in Davos in the last hour, he touted his economic the economic success of the country and the globe just a short time ago. Here's what he had to say.
This is a blue-collar boom. Since my election, the net worth of the bottom half of wage earners has increased by plus 47%, 3 times faster than the increase for the top 1%. Real median household income is at the highest level ever recorded. The American dream is back, bigger, better, and stronger than ever before. No one is benefiting more than America's middle class.
Ray Dalio, you've talked about income inequality for a long time. You talked even about the potential for a civil war over income inequality. What's your reaction to what the president just said?
I think he gave a good speech, and he talked particularly about productivity. In other words, and he talked about Florence and how that human energy that the United States and that we need, that inventiveness, that creativity, and converting that into commerce has created a beneficial outcome. Yeah. And that is representative through history, time and time again. If you have the energy of the people and the motivation of the people to move forward, that is true. And I also love his trillion tree policy in terms of that. I think that was good. He is not talking about the deficit question and the money question. So we're going to enter a period of time which we have to deal with the amount of money that we're going to have to borrow, who's going to lend it to us, and what that'll mean for monetary policy. But it was a calm, thoughtful.
Do you think he was touting? I have a problem with that word that we use. Attempt to sell something by pestering people in an aggressive or bold manner. It's just that this goes back to the press issues that we've talked about.
I think the problem is,
and all you did was read it. You didn't write it. But I have a problem.
I think that the problem we have is that we're having a war. I mean, meaning everybody's on one side or another.
You're right.
You're either anti-Trump or you're pro of that. And no matter what he says, it's either going to be anti or pro, depending who the eyes are going through. And if we're not looking at things objectively, we've lost our objectivity.
Okay, so let's look objectively.
Well, I want to get back just for a second to what Ray's saying about central bankers and the Fed here. They seem to be of the notion they can let things run hot right at the time maybe they shouldn't be letting things run hot for too long. I mean, Powell is basically saying we're going to go above 2 because we don't. We always make this mistake. We think it's never coming down.
But I think the risks are asymmetric on the downside, because let's say you go to 2 and you go to 2.5. You know you can always the brakes will work.
Okay.
There's enough debt. You raise interest rates a bit, the brakes will work.
So you're not that worried near term about inflation.
No. I think there are 4 big issues in the world, and if you know these 4 big issues and their interrelationship, that's everything. The first is this wealth values gap and polarity that could force us to go to one extreme or another. It's an issue and it's an argument internally in most countries and externally. The second is the difficulty of monetary policy to be able to be stimulative when it's needed. The third is we have the rise of China as a competitive power and so on. The main thing I'm trying to say is if you get a downturn, and there's a good probability in the next term you'll get a downturn, and you don't have effective monetary policy, and you have people at each other's throats, I'm worried about that, okay? That I think
because
is the big thing.
Because you can't get fiscal policy to go along when you have people arguing.
Right, and then fiscal policy is going to be in the hands of politicians.
Yeah.
And so will that money be well spent? Because you have to make productivity, right? Mm-hmm. So the idea of just give money away, wealth doesn't last. When there was the Russian Revolution, they said, we're going to take all the wealth. They took all the wealth. Wealth lasts an average about 5 years, basically, because you look at depreciation. You need productivity. And so how do we make that population productive and make that?
So can I just ask one question to clarify? You said you think there's a good chance of a downturn coming in the next term. You mean the next 5 years, the next presidential term?
Yeah,
sometime between now and 5 years?
It's going to happen.
Yeah, it's just a long time.
No, but I'm saying this is one of the things that's such an American mentality. If you go to China and you start to think, should we talk about it? Mm-hmm. Should we think about it? I would say that there's a 20% chance any year, but also you don't have a rollover, because the key was the Federal Reserve in December backed away from a too-tight monetary policy, and we're enjoying it ever since. But the big thing is then you have a wash in financial assets, okay? Everybody can borrow at cheap interest rates, and you want to get out of cash. There's still a lot of money in cash. Everybody's missing out. So everybody wants to get in. You can have,
You can still have a spike, but here's the question.
So we should look beyond just 12 months. I think the next 12 months, my guess is probably nothing much happens in the next 12 months. Then we have an election. Then we begin a new environment. So we have to start thinking ahead of the next 6 or 12 months, I think. That's what keeps you ahead of the game.
But here's the question. So we had David Tepper had texted into the show on Friday and suggested right now that you have to be in the market full on. And so the question is whether everybody jumps on the train, everybody gets in full on, and then the problem arises that you're talking about.
Most likely.
But then the question is when do you jump off the train?
But also the question is, what do you jump into when you jump off the train? And the issue is you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out. Okay, so cash is not going to.
So what do you do?
So what you have to do is you have to have a well-diversified portfolio. And first of all, you have to be global, and you have to have balance. And I think, I don't want to grab. Well, the headline's going to be again anyway. I think that you have to have a certain amount of gold in your portfolio, or you have to have something that's hard. There are 3 monetary systems that happen. The first is in the old days, it had intrinsic value. You'd carry around gold coins. Then we come up with the idea of banks or even central banks. And what they do is they create certificates, we call notes, that are claims on those things. And we print many more certificates than there is money in the bank. And then that's a linked system. And we did that, and we broke that in 1971. Then you have a fiat monetary system, which means that you can print whatever amount of money you want, and you can put that, and that's what governments do. So we're in that part of the cycle, bigger picture, so that when you think about things, the depreciation of the exchange rate and the printing of money, I think over the next few years is going to be the biggest.
If you want to buy gold, you buy Bitcoin?
No, there are two purposes of money: a medium of exchange and a storehold of wealth. And Bitcoin is not effective in either of those cases now.
Store of wealth?
No, because first
potentially.
It's too volatile. Because of the volatility, you can't go next to it. Someday when it, I would say Libra or something which has more stable value, has got more potential. But also, who's going to do the buying? Central bankers and others. What are they going to hold as reserves? What has been tried and true? Are they going to hold digital Bitcoin? They're going to hold gold. That is a reserve currency, and it's been a reserve currency for 1,000 years. I know this is going to be the headline of gold. I want to emphasize a bit of gold is a diversifier, okay? And that's the advice I can give. I know I'm going to come out of here like Ray Dalio's wild on gold, and that's not exactly...
I'm going to say cash is trash is your headline.
But cash is trash.
But Ray, you would have thought that after all the years of zero interest rates in QE 1, 2, 3, and 4, you could have been making this case that entire time of what you were just making. Maybe there was so much of a lack of demand in the private sector following the financial crisis that it was able to absorb all of that. But coming to us now with that, it almost, at the risk of sounding like the boy who cried wolf too many times, I'm not saying you did, but we all were, the death of the bond vigilante, it's been well documented for the past 10 years. Now you're saying it's the time to work.
I think it's totally different. Well, I would say when we are dealing with the negative interest rates,
which we've had for years and years already.
Well, no, we know how long it's been. Okay, and you take each country, and you take where we were in December toward the tightening, then you create an easing. We are now coming into a direction. And so the question for any of us is not whether it's early or not. The question for any of us is when you're holding all of those bonds and you have a negative interest rate or something, and how far more can you push that? What does the next 5 years look like? And the next 5 years is going to be something like that, plus there'll be more deficits. Now, more deficits means sell more bonds. Who are you going to sell the bonds
Why should I believe we're going to negative interest rates in the United States?
Well, I think that, and I'm not saying now, I'm saying that, okay, if you have a next downturn, okay, it's on average 500 basis points of rate cuts. Oh, then you can't do that. You go to QE, right?
Right.
And
we're having trouble normalizing.
Stimulant.
Right.
We don't have much stimulant. We have people at each other's throats over the wealth gap. And so what will the next downturn be? And also, why would you want to hold those? So why do you want to hold those at some point? I don't know. I could be wrong. I've been wrong plenty in my life. So I could be wrong. I'm just trying to describe, tell me why that makes sense.
So when you talk about who's going to buy these bonds in 5 years from now, I'm curious whether you think the Chinese will be one of them, or whether this larger debate around the U.S. versus China is going to play itself out in that context.
Look, I could say what if I was in their shoes, how I see things. They have $1 trillion worth of bonds. The bonds are not, that they're not going to provide much in the way of returns. And if I was them, I'd be afraid of sanctions on those bonds, meaning the president can unilaterally actually say, I'm not going to pay that debt. I mean, how appealing, if I was Chinese or if I'm another, we're at the three major reserve currencies are at later stages.
But you think this is more a function of
that
this?
Was very much the same as the 1930s. Okay, meaning, okay, how is that stimulation going to work, right? So answer my question. If you can't lower interest rates much, right? And if you do quantitative easing, you're going to buy more financial assets and so you can get more financial assets, But how is that going to deal with those other issues? Isn't that an issue?
We just decided that we're going to go 28 years in this recovery like Australia, so there's not going to be a downturn, so we're not going to need 500 basis points of cutting. And the income inequality, if you look at the quality of life overall, it's much better than it's ever been in history. You're starting to see some organic growth at the low end from all this growth we're seeing in the low unemployment, and maybe it ameliorates it to some extent. And the worst case scenario that you have painted doesn't happen.
I'm totally possibly wrong on, I think we know those things I'm saying about the deficits, the money printing, the lack of stimulation, and so on.
Right.
There is also new technologies that are coming out. There's inventiveness and innovation. Right. Innovation comes from good thinking. The capacity to supplement using artificial intelligence to
we talked about.
So I think we can make the pie bigger. The issue is how you divide the pie, and also how monetization is a threat. So there are good things here. I mean, basically, almost if you oversimplify a portfolio, you probably want the stock in the technology disrupting companies and some gold. I mean, because it's the new technology revolution in relationship also to the monetization question, I think.
We got to go, but the president taking a bit of a victory lap for the Phase 1 China trade deal, and I'm just curious what you think of the relationship. Has that genuinely de-escalated things? Do you think it's going to get worse over time, better over time, and how does that? That's why I was asking about the bonds. Does it play into not just whether the bonds are attractive or not, but whether there's a larger fight at play or battle at play?
There are 4 major conflicts that we're having with China, and trade is one of them. And this deal is a small part. It's a deal, and it's done. But there's a trade, there's a technology war going on.
Right.
There is a geopolitical war that's going on. There could be a capital war that is happening. Because what you're having is the emerging power, in many ways going global, and challenging an existing world power, and there's going to be lots to argue about. So after the election, those things don't go away. That's just how rises and declines of powers happen. And so I think that those issues, this is a small thing in relationship to the whole big thing.
Okay. Ray Dalio, it's great to see you. Thank you for coming in this morning. Appreciate it.
Thank you. When we return, we're going to talk a lot more about what's been happening here in Davos. Also, the hottest investments in the world of private equity. We'll be speaking with the CEO of General Atlantic, one of the world's largest growth equity firms. And then we're going to be talking politics and economic policy with National Economic Council Director Larry Kudlow. A reminder for you, by the way, you can always watch and listen to us live on the go on the CNBC app. We'll be back in just a moment. You are watching Squawk Box Special Edition in Davos right here on CNBC.
This limited commercial half hour, live from Davos, is made possible by Morgan Stanley.
Nothing comes easily. That's what happens in golf and in life. I'm very fortunate that I can lean on people, and that for me is what teamwork's all about. You can't do everything yourself. You need someone to guide you and help you make those tough decisions. That's Morgan Stanley. They're industry leaders, but the most important thing is they want to do it the right way. I'm really excited to be part of the Morgan Stanley team. I'm Justin Rose. We are Morgan Stanley.
CNBC at the Ultimate Power Summit. World and business leaders, influential thinkers, together at the World Economic Forum in Davos. Global challenges, smart solutions, new opportunities. Davos continuing coverage on CNBC.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
This limited commercial half hour, live from Davos, is made possible by Morgan Stanley.
Live in Davos, Switzerland this morning, and we've got a series of fabulous guests. Right now, we're going to talk, though, about skyrocketing valuations. They have changed the landscape of private equity. We want to talk about it. PE firm General Atlantic has invested $34 billion in more than 360 companies since its inception 40 years ago, including Uber, Airbnb, and ByteDance. You may know it better as TikTok. Joining us right now to talk about it is the CEO of that firm, Bill Ford. Good morning to you.
Good morning, Aaron. Good morning, Becky, Joe. Good morning.
We're going to be on a panel together in just about an hour and a half from now. And we're going to talk about the valuations of unicorns. So maybe we'll just do a quick preview, and then I want to get into a couple other items with you. But when you think about Uber, when you think about Airbnb and potentially becoming a publicly listed company this year, there's a huge question about whether the private valuations make sense anymore, and whether actually all of these funds are going to ultimately have to bring those valuations down to match the rest of the market.
Well, I think it's a tale of two cities in some ways. I mean, last year we had a case where it was the public markets disciplining an overvalued private market. Right. And we saw that consistently, where in many cases the last private rounds were above the IPO price, and even where some of the companies are trading today. So that was the first thing. But on the other hand, the growth rates have been spectacular for many of these businesses. Even Uber last quarter, 30% plus growth. ByteDance and Financial in China, 50% plus growth. So the growth rates are there to support reasonable valuations, but we just got ahead of ourselves last year in the private market.
Are you buying anything? Steve Schwartz was with us just about an hour ago. He said it's expensive out there.
It's expensive. That's why we are focused mostly on growth and really underwriting that growth as carefully as possible. Last year, our portfolio, the average growth was 32%. And so we're really trying to do is to...
In terms of revenue?
Yeah, revenue growth 32%. So we really had solid performance, and many of them profitable, 2/3 profitable. So the growth rates were solid, and you have to, I think, the only way you can justify these valuations is company quality and company growth.
Given all of the focus on regulating and regulations around some of the big tech companies, which used to be the exits for so many of these companies, how has that changed the dynamic with which you think about buying something and eventually who you may or may not be able to sell it to?
Yeah, I think it's going to be a period of time where we're going to see a shift from strategic exits to the IPO market. And we saw the IPO market open up last year. We had 8 companies go public, 3 were Chinese, 1 Brazilian, 1 Middle Eastern, and CrowdStrike, 1 from the U.S. And I think we're expecting another pretty good IPO market, but I think we'll be a lot more reliant on the public markets going forward than M&A, at least for the foreseeable future.
How concerned are you about your investment in ByteDance? Also, this is TikTok, for everybody who doesn't know the full backstory of what this company is, but there's huge questions about this company, about where these images are going, whether the Chinese government has access to them, all of it.
First of all, it's a terrific company. ByteDance, 800 million daily active users, $15 billion plus of revenue, terrific entrepreneur. They've been very careful in how they built TikTok. It's from the very first day been built outside the Chinese firewall with very, very careful curation around data privacy and community rule sets. So I'm pretty optimistic they've built this in a way that's different from some of the other social media companies and very cognizant about the sensitivity around data privacy. So I think you're going to see this company continue to do very well.
Bill, can I ask you about the Airbnb IPO? I know you're an investor there. We've got Arnie Sorensen, who's going to be joining us a little later this morning, and obviously they're working at ways to kind of compete with that too. What does Airbnb do with the money? Do they pay out a lot of the investors that came in with the IPO money, or do they use it to reinvest and find other ways to expand their brand and their market?
I think they're going to continue to reinvest and continue to grow internationally in particular, and also with some line extensions. I mean, it's a wonderful company, had a great growth year last year. I think they really have been methodical about preparing for the IPO. I think they're ready for it, and I think it'll be an exciting one.
Is your expectation that it is an IPO or that it turns out to be a direct listing?
I think they're still debating what the right way to go is. I wouldn't be surprised if they choose the direct listing path because they don't need to raise a lot of capital, Becky, to your point. But I think they're still hashing that out.
Does it matter to you?
Not really. I mean, it's still going to be building a case for the investors to understand the company and its long-term prospects.
Do you worry about the regulatory overhang? I mean, a lot of these companies built their way up, and they were too small for the regulators to kind of come after them. Airbnb has faced a lot of pushback from communities where they've been operating, and how do they do this thing where they bring in all shareholders and the community and all of these other aspects, but still deal with the way that it's been abused at points?
Yeah, I think all these large tech companies are going to have to really make a priority of government relations and understanding regulation. And I think Airbnb has done a particularly good job on that from the very beginning, recognizing that governments were their partners in many cases. But this is going to be, I think, a theme for all of 2020.
Although there's places like San Francisco where they blame them for the fact that rents are so catastrophically, incredibly high. That because people can rent their places out and have anybody coming in, it means that people can't afford to find a place to live there.
Yeah, and they've tried to be a good citizen in places like New York and like San Francisco and make the case where they're additive and they're helping middle-income families actually make money for themselves. So I think they've done a good job, but they've got to recognize that they're going to have to invest significant management time and senior leadership in those relationships.
One of your colleagues is still on the board of Uber, is that correct?
Yeah, Anton Levy.
Yes. Yeah. What's your take on their future prospects and given what's happened to the valuation of that company?
I'm very bullish on Uber. I think Dara and Nelson Che, their CFO, are doing a great job rationalizing their portfolio of strategic investments around the world and really tuning the business model to move towards profitability. And I think you saw, $100 billion GMV, nice, last year, nice growth. I think it's got really good prospects. And even today's announcement about selling their food delivery business to a local competitor in India and converting what is a money-losing business into a strategic investment. It's a good move.
So scaling back, not scaling out.
Right. Yeah, focusing. I mean, win in the rideshare business. It's still growing globally, and they're the market leader.
But what do you, by the way, that sort of is suggestive of a larger shift, which is if investors are forcing these companies to move faster towards profitability rather than growth, what does it mean to the long-term growth prospects of these companies and the long-term ability to have this sort of sky-high valuation?
Survival.
Well,
that may be. Well, if you think it's just that the patience of the investor has changed.
Well, I think capital discipline is back. I think one of the stories of 2018, 2019 is that companies lost focus on business model, lost focus on capital utilization, lost focus on governance. And I think what we're seeing is a pendulum coming back and saying, capital, how you use your capital matters. Focusing on your business model and how it ultimately gets to profitability. Gross margin profitability, operating profitability matters.
But by the way, it was some of the investors that pushed them to growth to begin with. Masa-san, that was a huge thing for him. He just wanted them to get as big as possible.
I agree, and I think there's been basically a recognition that good governance with entrepreneurial management, capital utilization, discipline is really going to be important going forward.
When we look back 10 years from now at the sort of vintage that Masa and SoftBank have supported, what's going to be the lesson?
Well,
is it going to be a great success or a great failure?
I think a couple things are going to come back to valuation matters. Two, how you use your capital matters. Quality of governance matters in the ultimate investment outcome. And so I think that we're going to look back and say he invested in some terrific companies at the wrong price and didn't impose the kind of discipline that is helpful to a company as it evolves in its development.
Okay. Bill, thank you for being here. We will see you in just a little bit on the stage.
Looking forward to it.
Thank you.
Thank you.
Appreciate it.
Thank you, Joe.
Whew. Okay, still to come on this four-hour edition of Squawk Box. Paul Tudor Jones will join us, and then National Economic Council Director Larry Kudlow is here in Switzerland. He will join us. It'll be fun. This is Squawk Box in Davos on CNBC.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Go courtside with the NBA on TuneIn. With the NBA on TuneIn, hear your favorite team and players take on their biggest rivals during the biggest games throughout the year, including regular season showdowns, the 2020 All-Star Game, and the NBA Finals in June, featuring the home and away calls for all 30 teams. Plus, with the NBA on demand, relive the best moments of the season by listening to the past games in their entirety. Listen to the NBA all season long on TuneIn.
Welcome back to Squawk Box this morning. We are live from Davos, Switzerland, and we are joined now by legendary investor. He doesn't like when we call him that, but Paul Tudor Jones is here. He's the chairman of Just Capital, of course, chief investment officer of Tudor Investment Corporation, and we're thrilled to see you this morning.
Good to be here.
We've had a number of conversations about where we are in the economy. I want to show you what Ray Dalio said in just a moment. We also saw what the president had to say about the economy. But before we get to Ray's comment, wanted to get your assessment of where we are.
Well, we're just, again, in the craziest monetary fiscal mix in history. It's so explosive. It defies imagination, and I don't think anything's changed. It reminds me a lot of early 99. So early 99, we had 1.6% PCE, 2.3% CPI. We have the exact same metrics today. The difference is Fed funds were 4.75%. Today, they're 1.62. Back then, we had a budget surplus, and man, we've got a 5% budget deficit. You can't make it up. We had an impeachment. We just had 3 rate cuts because we had this external crisis. So crazy time.
So you want to be on the train, and then you need to get off of it pretty quick if it's 99.
Well, not really. The train's got a long, long way to go if you think about it, what happened in the ensuing 12 to 14 months. I would say we've got a curveball with this coronavirus. I think that's a big deal.
I hope not.
I mean, it is. If you look at what happened in 2003, it was estimates range 0.5 to 2% of GDP for China, 0.5% for Southeast Asia. Stock markets sold off double digits. If you just look at the escalation of the reported cases, it feels a lot like that.
It's an old virus. We know a lot about this virus, I think. I would think we'd be able to develop something pretty quickly.
There's no antidote. There's no vaccination.
Can't do it.
There's no cure. We don't even know what the incubation period is.
Right.
And you're obviously getting ready to go to the biggest travel period in China. So when we're going to find out, we kind of know how lethal it is. It seems a little bit less than SARS was, but we don't know how virulent it is. And now we've got this time bomb of travel taking place in China.
So are you seeing through this or not? Right. I mean, on a morning like today, when David Tepper on Friday...
I'm a trader, not an investor.
Correct.
So if I was an investor, I'd be really nervous. If from a trading standpoint, there's zero way I'd want to be long until... we really need about 2 weeks to see what type of spread we get. I know I just saw something before I walked in here. I don't know whether it was the actual Chinese government reporting it or whether it was just someone estimating, but it said 118 cases suspected in Hong Kong. If that was the case, that's a huge deal.
Can I just back up, though? Everything you said before you mentioned this latest coronavirus basically sounded like just what Tepper had told Joe on Friday, which is get on the horse and ride it, because everything's been set up to mean that stocks are going up, with the exception of a possible curveball like SARS.
Yeah, well, and in 99 you had a bunch of 6% corrections. This one might be, again, more meaningful, because I do think this epidemic's a big thing, because you've got such a much higher rate of travel, a much higher chance of infection. You're already in 3 or 4 countries. And yes, I think it's a big deal. So
more
clearly, we've got monetary and fiscal conditions that would argue for some type of a blow-off that will ultimately be ended by the Fed hiking a lot sooner than they even begin to contemplate. Yes, I think David's right. I do think what's happened in just the last 4 or 5 days is hugely impactful.
Let's show you what Ray Dalio just said to us in the past hour. I want to get your reaction.
The issue is you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out. Okay, so cash is not going to be. So what do you do? So what you have to do is you have to have a well-diversified portfolio. And first of all, you have to be global, and you have to have balance.
Making the argument effectively that when in fact you do get off the train is not a cash train. You can't, that cash effectively becomes devalued. And he's made the case, by the way, also for gold, even though I know he made it clear to us he didn't want that to be his headline.
Right. Again, we're in such extraordinary times. We've never seen a fiscal monetary mix like this. So it argues for some massive blow-off at the top. And at the top, whatever that might be, remember, between now and the top in 99, the NASDAQ was up 130%, right? So at the top, I would argue, but that's a long way from now. At the top, rates theoretically be substantially higher. They're not going to be 1.67 with this mix. They will not be here forever. There will be, the animal spirits will go, the stock market will go, until at some point the Fed gets in the game from this insane monetary policy they're running.
Want to pivot. You're here on behalf of Just Capital. This is your first time here in Davos, by the way.
I'm so privileged to be here with all the muckety mucks and talking heads. I mean, wow, I'm just overwhelmed.
You can feel it, can't you? But one of the issues, as you know so very well, is this idea of sustainability. It's one of the big themes this week. And yet we were talking a little bit about what may be the hypocrisy of it all, in large part because Becky was at a dinner last night. It didn't come up as a topic until sort of late in the game.
And only because then they mentioned it had not come up to that point. And then we went back to the China.
Right. You have a lot of CEOs here who seem to be very happy with the President Trump, and his economy. He did a bit of a victory lap just in the past hour or so. Of course, he has a very different view of climate and sustainability. So what gives in all of this?
So if I'm just going to hijack that question a little bit. I think you can boil it down very simply. In 1970, we had profit margins 6%. Today, they're between 11 and 12. Last year, we had $2 trillion of corporate profits. If we were back in the sharing arrangements of 1970, $1 trillion, instead of going to shareholders, would have gone to employees, customers, communities, and the planet. So this social divisiveness that we have, what we're seeing playing out in the political arena, while we have two socialists that have a great chance of being the Democratic nominee, is because the sharing that we have currently is not working for the majority of the country. And the American public, from our polling, we say, what is just corporate behavior? And they tell us there's 29 components. Number 1 is fair wage. Number 2 is ethical leadership. Number 3 is living wage. You know what the 29th component is at 1.2%?
What?
It's shareholder return. So you've got this massive dichotomy between what the people want and what the C-suite's delivering and what we're going to do over time. And I was really heartened because I was at a CEO dinner last night. And what we're going to do is rearrange the sharing. It's not going to be just about shareholders first. If you remember back in the 60s, when the sharing was completely different and we had a 6% profit margin versus 11, GDP growth was twice what it is today. Now, I want to give you.
Isn't that though partially because there was no competition outside of the United States at the time?
Well,
so that they could share it more with the employees, and because they could have effectively higher rents, if you will.
I don't think it's binary. I think there's shades of gray in everything. That's a very good point. But I think the most important point is that we know what's happening right now is causing millennials not to believe in the system. We know that there's a threat to free markets, which is the best way to allocate resources, in my opinion. I'd much rather see us change the sharing agreements organically bottoms up, where CEOs put employees first, put the planet and communities and customers on par with shareholders. If you had a blank sheet of paper and we were starting and trying to maximize societal happiness and output, and we had those 5 stakeholders, shareholders, employees, customers, communities, the planet, would shareholders be the most important thing to manage companies around? I don't think so.
We got to go, but then how much of this is about business trying to get ahead of regulation? And that would be the cynical take.
I think, well, from what I heard last night, I think CEOs love the idea of the new business roundtable definition where all stakeholders get even, because they want to put their employees are the most important folks.
Shareholder return, all that really measures is the profitability of the company and how it's satisfying its customers and its employees and its communities and everything else. And then the stock ends up and then shareholders make money. No one wants zero profitability and flat shareholder returns. That's not going to help anyone. Then you can't do anything. Okay, so it's like a chicken egg thing.
But again, it's shades of gray, right?
Okay.
And we've gone too far, and we've got to come back.
Paul Tudor Jones, thank you. Thank you so much for being here. Welcome to Davos.
Yeah, thank you.
When we return, National Economic Council Director Larry Kudlow will be joining us. We'll talk about his reaction to the president's comments from earlier this morning. Also, a reminder, Squawk Box in Davos is starting live at 5 a.m. Eastern Time once again tomorrow morning, so make sure you turn in early tomorrow. You can catch BP CEO Bob Dudley and many, many more. Squawk Box will return in just a moment.
Exploring whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
This ain't just lunch. It's the KFC fill-up lunch for $1.99. It's mighty fine. Tingles your spine, so jump in line while there's still time. 1 mini fillet burger, 2 hot wings and fries, all for a fist-pumping $1.99. What the... Fill up on the fill-up lunch for only 1 more week at KFC. Every day until 26th of January until 3 p.m. at participating restaurants, subject to availability.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Welcome back to Squawk Box. The futures right now have moderated some of their losses. We were down 120, 130 or so at one point. The Dow's now indicated down 80 6. The NASDAQ indicated down about 49 or so. The S&P indicated down 15. Coming up, National Economic Council Director Larry Kudlow is in Switzerland with us, in Davos. But I see he's got earplugs that he carries around. He nods a lot to a lot of the people. But he's going to tell us about what he's seeing in the United States, which the president just did. We called it touting, but things are pretty good. We'll be right back with more Squawk Box.
Later on Squawk Box in Davos, the Carlyle Group's David Rubenstein on the longest bull market in history, sustainable investing, politics, and the health of the global economy.
Go courtside with the NBA on TuneIn. With the NBA on TuneIn, hear your favorite team and players take on their biggest rivals during the biggest games throughout the year, including regular season showdowns, the 2020 All-Star Game, and the NBA Finals in June, featuring the home and away calls for all 30 teams. Plus, with the NBA On Demand, relive the best moments of the season by listening to the past games in their entirety. Listen to the NBA all season long on TuneIn.
On this week's On the Media, we peel away the many layers of the Warren Sanders sexism sideshow.
The first layer is, can we acknowledge that in a country that has only elected male presidents throughout its history, that gender is a factor?
Also, depressed by politics? We have a plan for that. Listen to On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
And save more so you can start planning your next adventure. Just download, click, or call and save on the best flights.
CheapOair.com.
Go ahead, be cheap.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
This is the Pod by 8 Sleep. It's deeper, smarter sleep with personalized cooling and heating on each side of the bed, keeping you at the ideal temperature all night long. It's premium support and comfort, and a daily sleep fitness report that coaches you toward optimal recovery. Experience the softer side of tech, because better sleep makes for a better you. This is not just a bed. It's the Pod by 8 Sleep, the most advanced sleep system on the market. Learn more at 8sleep.com.
Welcome back to Squawk Box, live from the World Economic Forum in Davos, Switzerland. We heard from President Trump earlier this morning.
Years of economic stagnation have given way to a roaring geyser of opportunity. U.S. stock markets have soared by more than 50% since my election, adding more than $19 trillion to household wealth and boosting 401ks, pensions, and college savings accounts for millions of hardworking families.
Joining us now, National Economic Council Director Larry Kudlow. We have so much history, Larry.
It's a pleasure. Thank you for having me.
Great to see you. 25 years.
Pleasure.
Squawk Box is
Live in
25 years
Davos
old.
together.
Do you remember coming when we brought you back on Squawk? And look at you now.
Well, it's, I've always said this is a blessing, and it's been wonderful working for President Trump. It's been about 2 years for me. A lot of the projects that we work on came out in the speech today. I thought he gave a terrific speech.
What was your old saying? Can we say it one more time that you told me 25 years ago that I believed?
It's free.
Can you remember?
Free market capitalism is the best path to prosperity. That's held up pretty well, actually. People still use that. That was from our show.
Is this what we're experiencing? Is this the type of prosperity that you alluded to?
President talked a lot about a free and vibrant market economy where people are rewarded and they're able to grasp opportunities. And I think that, you can say, sure, I got to say that because I work for him. But the reality is the facts are there. And I think for me, one of the most interesting parts of this boom right now with tax cuts and deregulation and energy independence and rolling back unfair trade practices, it's the middle class. All right, we call it a blue-collar boom. It's the middle and lower wage earners who are growing the fastest. They're growing much faster than their managers. And that's very rare. The last time I saw that was when I was with Reagan in the 1980s. And that's really gratifying because, as POTUS said today, we want an inclusive economy. And we're getting an inclusive economy. And in relative terms, even with respect to the stock market, I know the middle and lower classes don't have as large holdings of stocks, but their rate of increase in household net worth has been running, 12 to 15
Larry,
times
the good news has made it into the pages of the New York Times and Andrew's column today. And remember, we remember 2 years ago, when the president came here 2 years ago, there were some raised eyebrows. Yes. Who was this guy? What's he doing? He was a mega media star back then, the crowds that followed him here. But he's back here, and Andrew, what
did you say?
Andrew said he's being embraced and
called the new Davos man because the construct of what it used to be Davos man of
the
this
New York
idea
Times, Larry,
of multilateral negotiations, of everything being, and he sort of turned the whole thing on its head. And I think there was an expectation 2 or 3 years ago here that it wasn't going to work.
Right.
And everybody, dare I say, has been thus far at least been proven wrong.
Well, thank you for that. I thought Klaus gave a great introduction this morning, which was very important to set the stage. And he basically had, 2 brief themes. Number one is optimism. The president is an optimist. I'm an optimist, always have been an optimist. Number 2 is what a prominent role the president is playing in international affairs, not just foreign policy, but trade policy. Now, folks said he was an isolationist and so forth and so on. The reality is, we've cut huge trade deals, one in China, one in North America, one in South Korea, one in Japan. We're still working on the EU. In fact, I will be in the bilateral with the new president of the EU and President Trump. So he has been very prominent in international affairs, and he is an optimist. And I think the country's in a better place, to be honest with you. I just think people are happier. The president mentioned that today in his speech. I think we're in a better place.
Is the growth we're seeing for the middle class and even below middle class, why is it called crumbs by the left? Why do a lot of people in the media say that the income inequality is still the overriding concern and it's going to end badly in this country? Is this enough organically? What we're seeing is at the beginning of something real?
Well, look, I think so. I think as long as these policies are in place, that's a very important story. And I think that a lot of the stock market bet this year is going to be about that subject when the campaign heats up. But look, inequality is diminishing right now, okay? And there's a lot of cognitive dissonance about this. People don't want to look at the facts. And folks on the other side are painting a dreary picture of an economy in deep recession. Only 12 fat cats are making out well. That is simply not true factually. And one of the lines in here that I also I got in towards the back end, I know the millennials are supposed to be all socialists and so forth, but actually, be careful here. We looked at these numbers, age 25 to 34, which is the millennials. Their labor participation rate is soaring, and their wage increases are better than 5% per year. And I think, if we all think back to when we were in that age bracket, starting careers and so forth, when you're working and paying taxes and you have household needs, the job is important, and being rewarded for the job is very important. And I think president's going to do much better among the younger folk than people think.
Because as millennials are aging, they're getting on into all of those same sort of things.
That's the way I see it. I don't think they're going to vote socialist, frankly. And, what Reagan used to call take-home pay, you look at median household income after inflation and after taxes, that is soaring. It's up $5,000 per household in 3 years. Okay, and the prior two administrations, Republican and Democrat, were basically flat to down. So it's a huge change. The whole trajectory has changed.
What do you think of the whole sort of stakeholder theme here, that investors and that company leadership should not just be focused on shareholders, but should be focused on so many other constituents? There's also a huge focus, as you know, here on sustainability. I know the president talked about it, this Trillion Trees program, but his policies, in large part, have been somewhat antithetical, if I could be so bold, to the policies, for example, of Microsoft, which is now pursuing a carbon, not just neutral, but carbon negative program at their company.
I'm okay with that. I don't see anything wrong with that. By the way, I work very closely with the Microsoft folks on 5G. They're so helpful, the president of Microsoft. Look, it's interesting to me, the stakeholder theme is not a brand new theme. And I think any responsible company has to think about their so-called stakeholders. I mean, you're talking about labor management relations. You're talking about community relations. I think that's a good thing. I don't think that should get in the way of good profits and earnings, because that's what drives the system. And judging from the stock market, the outlook there is still very good. But I don't want to exaggerate it. I mean, look, we are opposed to a government-run socialist economy. The president was very clear about that in his speech this morning. We are opposed to that. Beyond that, stakeholders are a good thing. It's just acting responsibly. But you can't forget the profit motive. That's what makes the engine run.
It's a blessing and a curse. I've known you for so long. You used to be pretty hawkish on deficits and debt.
Deficits and debt. I was never really a deficit monitor.
Well, but you were about normal for where most people were, and none of us are there anymore.
I'm a supply side.
Okay, what happens if there's a second term? What happens? Does the president no longer accede to what the Democrats want? I mean, he had to do it for the defense bill, obviously. He had to agree to things that he didn't want to agree to. But how do you stop the runaway entitlement spending when he won't do anything with Medicare or won't do anything with Social Security? Would that be on the plate?
One theme here is politics is the art of the possible. So you have split houses right now. I think if the GOP can recapture the House in the election, and I think there's a pretty good chance they will, something like 18 or 20 seats, something like that, we'll have more spending reforms. But I also want to emphasize the growth. I mean, look at revenues are rising. After the tax cuts, revenues are rising. Corporate revenues are rising. By many estimates, we've already paid for the corporate tax cut. Not the whole tax cut, mind you. That's going to take several more years. I think economic growth is the ultimate solution to budget deficits, okay? We're running now, I guess deficits as a share of GDP is something around 5%. Now, to me, that's a manageable number, given all the reforms that we put in place. Spending's about 21% of GDP. I would like to see it lower. I think the president would like to see it lower. Look, as a businessman, he tackles waste, fraud, and abuse. Look at the regulatory changes we've made. He had a number, it's about $3,100 per family just on the regulatory savings alone for small businesses and so forth. And yes, I think everyone's going to have a stronger look at spending. If that is possible. I think you're going to need a united Congress to do it, but I don't want to get too far ahead of that game.
Can I just ask, we had Ray Dalio with us earlier, and he said that he thinks in the next 5 years you will see a downturn. Just playing the odds, looking at how long of a growth spurt that we've seen. He said if that happens, he's worried about what happens next. First of all, the Fed is not going to have the power to lower and stimulate the economy like it has in the past. And then he worries on the fiscal front because he thinks the nation is more divided, that Congress is more divided. You're less likely to have two sides working together to do things to offset a downturn. What would you say to that?
Well, look, Ray Dalio is a friend. He's a very smart guy, and I've heard his view. But First of all, I don't want to get too far ahead of the story. In 5 years, I don't know, well, we may all be doing something else. We'll see. This is a long cycle, and what you've got here in the Trump years is essentially a mini upcycle. You've gone from 1.5 to 2% growth. We had it going at almost 4, then the Fed tightened. We're now down to 2.5 to 3. I'm looking for faster growth. I think we're going to get 3 this year. The trade deals will help the Fed change policy. That was very, very important. Unfortunately, some of our friends in Europe are not growing, so that, I'd like to see them take pro-growth measures. Fiscal policy is very important. I just want to make this point. All this, negative interest rates and printing a lot of money, by itself doesn't really work, does it? I use Europe here as an example. The ECB has negative interest rates, and their balance sheets are exploding. There's nothing wrong with the balance sheet rising. Negative interest rates struck me as ineffectual. But where are the tax cuts? Where are the incentives for people to work the extra hour and make the extra investment and take the extra risk? And in addition, the president made a point today. He departed from the text to make this point. You have to clear away the regulatory, bureaucratic cost debris, which clutters up and causes sclerosis in the arteries. And I don't think our friends in Europe have done near as much as they could to do that. I don't think it's wise to rely solely on monetary policy. The G7 is going to be in the U.S. I'm the Sherpa. It's an NEC run. We're going to explicitly have sessions and plenaries on growth and the role of all the different...
Your people want to stand there. They're rushing out. But maybe the Euros can learn from Davos man, the new Davos man, and adopt some of these pro-growth policies that they see are now working.
This will turn out to be a pivotal speech, in my judgment.
It's a pivotal deal book,
because they all heard it today very clearly.
Right.
And you ought to read the speech, by the way. It's a lot of fun.
We took it live. We took it live.
My pleasure. Thank you very much.
Thank you.
All right, Andrew is leaving us right now, too.
I am. I got to go do a panel. You always say
the other Davos man.
Something more important than this.
He's got a panel. We're going to check in on that panel in just a little bit. He will be back with us tomorrow morning, 5 a.m. for all of you, so you know we're here. When we return, though, we've got another hour of heavy hitters and corporate titans.
I'm leaving,
the CEOs of Anheuser-Busch, Marriott, plus the Carlyle Group's David Rubenstein. And Guggenheim's Scott Minerd. They're all going to be here. This is Squawk Box in Davos on CNBC. We'll be right back.
Yeah, I consulted with your grandmother's doctor.
Boredom, fitness enemy number 1. So don't just run. Run, run, mix it up, skip, run, skip, run. Give yourself a lift, mix it up, lift, mix it up, run, lift, splash, skip, lift, run. It's crunch time. Skip, mix it up, run, mix it out of boxing class. Skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run, mix it up, skip, mix it, run, mix it.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Good morning, everybody. Welcome to Squawk Box here on CNBC. We are live from the World Economic Forum in Davos, Switzerland. I'm Becky Quick, along with Joe Kernan. Andrew Ross Sorkin is moderating a panel inside this hour We're going to give you some updates on what's happening there. We'll dip into a bit of it. In the meantime, though, here are some of the stories that investors are going to be talking about today. President Trump once again taking a shot at the Federal Reserve, this time this morning right here in Davos.
These great numbers are many things, and it's despite the fact that the Fed has raised rates too fast and lowered them too slowly.
The president also spoke about the negative interest rates that some countries around the world are seeing. Also, Boeing is in talks to borrow $10 billion or more to deal with costs related to the grounding of the 737 MAX plane. That's according to people familiar with the matter who spoke with CNBC. They say that Boeing has already secured at least $6 billion and is in talks with other lenders as well. And Tesla rebuffed a petition to U.S. regulators calling for a recall of 500,000 cars for an alleged unintended acceleration issue. Tesla called the petition completely false and said it was put forth by a short seller. Tesla shares right now up by about 1.25%.
The economy, a hot topic here in Davos, and our next guest has unique insight into the strength of the global consumer. In this case, Carlos Brito is CEO of Anheuser-Busch InBev. It's great to see you.
Great to be here.
Not just beer, is it? We can start with what everyone's talking about, and that is, I've tried it. Have you tried it? Hard seltzer.
I have not. Hard seltzer. I'm not there
it's
yet.
big, huge growth. I mean, the kind of growth that I don't think anyone could have.
Yeah, Joe, it's one of those things that have been in the market now for 5 years, and this past summer, 2019, really took off.
Why?
It's something that it's flavored.
Yeah.
It's go well into health and wellness in the sense of, less carbs, less calories.
What was the number, though? The number, I saw a number, 250% growth. Is that possible?
Oh, yeah, no, that's totally possible. I mean, it's with beer now, this year, 2019, beer plus seltzer went back to growth after some years of decline in the U.S., slight decline. So it is something that's profitable. It's here to stay. We're very excited. We have 3 propositions. We have Bon and Viv, which is our premium. We have Bud Light Seltzer, which will launch officially now at Super Bowl. And we have our Natty Light Seltzer as well.
This is real. Sorry. This is real. And I can't drink beer anymore. I can't. It's not just me, but because if I drink 5 beers, it just doesn't work.
I don't want to sit next to
It doesn't work
for
for
me. Drink 4.
No, that second 6, they go down so smooth, though. Most of them. No, I'm kidding. But beer makes me full, makes me feel full. And this stuff, what we're really, it's not just a alcohol delivery system, but that's part of it. I like, I mean, you do, and seltzer,
it feels lighter.
It's a pure, clean way to maybe 6%. It's not
still has bubbles, though.
And I don't have to order, Andrew loves those wine spritzers, and I don't have to order, no, he doesn't really, but I don't have to order one of those, right? I can get
Andrew's a beer guy,
Oh, yeah, big time. Yeah. So this is this is something that makes a big difference.
That's great. It's a great opportunity.
Or what about everything else?
Growing. It's on trend, and we can play it. It's about national brands, and it's also something that can travel. So we're beginning to explore in some other countries because, the same trends you see consumer-wise in the U.S. are the same trends you see elsewhere in the world.
I mean, given as diversified as you are in beer and all around globally, is it that big a deal to actually start an interview about hard seltzer? Will it be that important? Because it's not there yet in terms of total revenue, but it's a big thing for the future.
No, it's a big thing because, again, it's something that's happening. It's on trend. It's profitable. It's growing. And that's something that the beer category has lacked for some years, which is innovation. And now the category is innovating very fast. And that's why you're seeing other beverages that could replace beer starting to decline.
When we ask you overall about the consumer, if beer has a problem, we're not getting a clear view of how the consumer actually is because beer, it seems like it's got its own problem.
Yeah, so sometimes beer is a category. We're a global company, Joe. So we look at the global, beer business. For the last 10 years, beer has been one of the few food and beverage categories that has grown rate and volumes on a CAGR basis for the last 10 years. So how many categories can say that? So it's a very blessed category to be in. Also because in terms of health and wellness, which is something very on trend, we can offer something all the way from 5% all the way to 0.
I know, but you're talking health and wellness and beer in the same breath, and that sounds very odd. I thought millennials were turning away from some of this stuff, which is maybe why they want hard seltzer in other areas.
Well, the hard seltzer is also 5%. I mean, the trick, look at Michelob Ultra in the U.S., the fastest growing brand in the U.S., what it offers at a lower ABV, lower alcohol, 4%, it offers a way for consumers to go out and work out and not have to compromise, And it's growing. It's the fastest growing brand in the U.S. And now with Pure Gold, it's the first USDA organic beer in the U.S.
I hear more and more people talking about dry January, where they're not going to drink alcohol in January. Do you see that in your sales, and do you have something for those people who don't want to drink alcohol?
Of course you do, because that's the advantage of beer. We can go from 5% to 2 to 3, all the way to 0. And 0.0 beer here in Europe, where we are, is a segment of beer that grow the fastest. So dry January, we can also have products for consumers,
Does that show up in your numbers? Do you see dry January, or is that just like a total Twitter phenomenon?
No, but it's an interesting segment because, again, it's very profitable. And if some consumers are willing to go for it, we are here to offer consumers on different occasions something so they can stay with us in our portfolio. That's what we're in business for.
All right. Do you think that Coke or some of the other beverage makers, do they have the same problem, do you think, in terms of innovation, in terms of satisfying health and wellness, in terms of, I know that, this is not beer, it's not InBev.
Well, we're also Coke bottlers, Pepsi bottlers.
Tastes are changing so quickly with millennials.
But all these companies are being very close to the consumer and going where consumers are. If you want to grow, you have to grow where consumers are. And consumers always drink something. So you can go from sugar soft drinks to non-sugar soft drinks to water to juices to coconut water to so many things. I mean, there's a breadth of things out there. And I think all companies are trying to go where consumers are going, because if you do that, you grow.
What about CBD? That's one of those additional growth areas. What are you seeing?
We're testing some of that in Canada. Right. It's still very early on. Canada is still illegal. We only do it in Canada. Very early stage. Not mixed with alcohol, no THC, just CBD. Only in Canada where it's legal. So we have a joint venture there. We're testing to see, to have an opinion about it.
What do you think so far?
So far, it's too early to tell. It just got legalized there 2 months ago.
Okay.
Do you have the whole supply chain thing exactly where you want it with bottlers and everything else? What do you spend most of your time thinking about? The logistics of the business, or
that's what we spend most of our time.
All innovation and satisfying consumers
and customers, and our people. I mean, we need to look at consumers. Customers, our retailers, is the way to get to consumers, and our people is the magic behind all this. If you have great people and they feel a sense of ownership to the company, they will go where consumers are going. They will treat our retailers the best way possible, because they win, we win, and that's the magic of it.
Will I see any advertising from your company at the Super Bowl?
Oh, yeah. You're going to see some Budweisers, some Bud Light, some Seltzers, some Michelob Ultra, Pure Gold.
That would be a yes.
That's a yes. Big time yes.
It's going to be a really good Super Bowl.
Oh, yeah. Very competitive. That's great. So looking forward to it.
I had both those teams, as I've mentioned to you
several times
already, even though they were big favorites. Hard to cover 7.5 points. It's hard, but they did. Anyway, Carlos, I think all this gambling's helping you too. I do. All the DraftKings. I watch all the games. I drink while I'm watching.
Oh yeah, no,
I'm not kidding.
I mean, no,
I see a lot of synergy.
Sports is a big occasion. Big. There's always been. Will continue to be. If there's one thing that people still watch live,
is sports. Especially if you're betting on it. Anyway.
Live sports.
And you got to have a beer if you're doing that. Apparently. Carlos, thank you. We will see you
Thanks
again
so much for having me.
When we come back, the head of the world's largest hotel company will give us his view of the global economy, the consumer, and the potential impact from that flu-like virus in China. Marriott CEO Arne Sorensen will join us next. Stay tuned. You are watching Squawk Box. We're live from Davos, and this is CNBC.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Welcome back, everybody. Travel stocks are trading lower in Europe and Asia today on growing fears about a potential outbreak of the mysterious coronavirus in China. Casino stocks with exposure to Macau also getting hit hard. Joining us right now to talk about lots of things that are happening out there is Arnie Sorensen. He is the CEO of Marriott International, and we're very pleased to have him here. And Arnie, it's great to see you.
Thank you. Good to be here.
Thanks for joining us. Let's ask you just very quickly about the SARS. I know it's very early on in this, or the the coronavirus that's out there. What have you seen, if anything?
We're obviously watching it carefully. It's still way too early to talk about. I think the Chinese authorities have got to make sure they understand what's going on, and we'll have to watch and see what we can learn from it.
Okay, I want to talk a little bit about your tenure. You took over in 2012, and since that time, you have completely made over Marriott. You've doubled the footprint size. I think you have 1.3 million rooms now. Stock has performed phenomenally, up about 230%, maybe even more than that since you took over. And that really beats your competitors. What their stocks have done beats the S&P 500. I just want to talk about how you've gotten so much bigger, all the different things that you're doing. Why is that? What's your basic philosophy?
Well, one of the conversations here happening in Davos is about the increasing movement of American companies or global companies towards platforms. And how do we take a collection of hotels with a loyalty program and offer more choice, greater loyalty connectivity, and drive more stickiness with our customers. And that's really what it's been about. So there's a piece of that which is about IT investing. There's a piece of that which was about buying Starwood, which brings in that many more brands, that many more locations for us to offer to our customers. And by sort of reinforcing that flywheel, we think we can take more share of wallet and deliver more value to our customers.
It's also about doing things like homes and villas, which is competing with the Airbnbs of the world who are out there. Right now, that's still small. How much do you expect to see that growing?
We don't want to be as big as the other players in this space. And I met the Airbnb founders here 7 or 8 years ago, something like that. And it was interesting to listen to them because they were building a model in which the host ranked the guests ranked the host, and they weren't blamed for bad experiences. I'm not sure they can pull that off anymore. We would have never been able to pull that off. And so what we've been watching is how do we get into that space in a place that is brandable, in effect, where we can have the reputation of the company stand behind it. And so we've done that at the higher end of the market, not luxury only, but quality. And we've said we want professional third-party home managers to be involved, so we make sure we got great bedding, standby services. If something doesn't go right, that somebody can step in and help, and then connect it to the loyalty program. And we think in that space, it will grow significantly. I think we opened with 2,000 homes. We're now at 6,000. We got 6,000 in the pipeline. These are still tiny numbers compared to the big platforms, but it will grow quickly, and I think give our loyalty members another option.
What are your plans from here in terms of additional growth? Are you looking to add more rooms? Are you looking to add additional branches, other businesses that you do to build out this platform? What comes next?
Well, I think in a way we say, how do we strengthen the core hospitality business? And I would put home sharing, all-inclusive, which we launched last year, the core hotel business, all in that traditional hospitality. How do we make our tech as strong as it can be? How do we make the loyalty program as strong as we can be? And then in this adjacent space, we've been in the credit card space with our partners, JP Morgan Chase and Amex, for a long time. Good economics for us and for the loyalty program. But how do we get into third-party restaurants? How do we get into food delivery both into hotels and out from hotel restaurants?
Like you're going to be doing your own Uber
No.
Eats?
We won't start these businesses ourselves. But how do we work with partners out there that say there's more connectivity for our loyalty program and move to make that loyalty program the most powerful thing?
President Trump was here today, and one of the things he talked about was this trade deal with China. What a great deal that has been, he believes, for the United States, and kind of setting the stage from here. China's your second biggest market. And I just wonder, what kind of impact did you see during these tensions with China? Was it anything more than international tourism to the United States being down, or did it have an impact on what you were able to do in China growth?
China's a big market, and so we see cities like Beijing, which were performing very strong throughout last year. There are other markets, take the South, Shenzhen, not as strong. And again, there are different factors for that. Some of it is about the economic drivers in China for those sub-markets. Part of it is leisure travel and where leisure travel is going. It won't surprise you to know that Hong Kong is a very weak market today. We would guess that top-line performance in Hong Kong will be down 50% in the first quarter.
7 months of protest.
First quarter of this year compared to a stable first quarter last year. But all things considered, it slowed in China, but it continued to grow year over year. So it wasn't a train wreck. And by the way, our Chinese arrivals to Marriott hotels in the U.S. were up very strong last year.
Why?
Chinese are traveling more. They want to see the United States.
So none of these issues created a problem for you?
They probably made the performance less strong than it would have been, but it was hardly the wheels coming off. I do think the trade deal being done will take a cloud out of the horizon and help build confidence both in China and in U.S. business in China.
You're going to keep all your brands? What's your favorite brand?
What's my favorite of 4 children? How about asking me that?
You need to answer. Okay. We're going to keep them all.
The easy thing is we're going to keep them all because we do think by having greater choice within our network, more and more customers will come to us through our network as opposed to some other way.
What's your favorite Ritz-Carlton? You can do that, can't you? It doesn't have to be the hotel. It could be where it is. It could be where Arnie Sorensen likes to go.
You guys are great travelers, and I'm sure you agree with this. So much about the travel experience is who you're with and what the purpose of the travel is. I can go with my wife to Paris and stay in any one of our 20 hotels in Paris and have the greatest weekend in the world. And it doesn't really matter the hotel I stay in. If you say, what's the most impressive Ritz-Carlton in the world?
What's the most impressive?
I'd probably take the Ritz-Carlton in Hong Kong. The lobby is on the 98th floor, and the rooms go up from that. There's a rooftop bar on the 120th floor. And you're looking across at Hong Kong Island. It is stunningly beautiful. And a great place to be.
There's an answer. That's it.
That is good. That is good.
It starts on the 98th floor. Okay.
We just want to check in with you about your health. Know you've had issues. You look great. Just how are you feeling?
Yeah, I had surgery in November. They dug around in my midsection for about 7 hours. So it was a sort of a monumental event for me. I'm back, though. I feel great. I've worked throughout. Cancer is a tough battle, and one of the things you learn from this is how big the community is of folks who have experienced part of this, who've survived. I feel good. I'm very optimistic, and I'm just grateful to be.
It was localized. From what they could tell, they removed what was there. Right?
They thought the surgery was successful.
Right.
Yeah. But again, you take this quarter at a time, or
like a person that goes and has those tests, and you wait for the results
over time. Yeah, that's right.
We're really grateful to have you here.
Thank you very much.
Grateful that your battle is going so well.
Thank you.
We've been following along with it too. Great to see you.
Yeah. Nice to see you both. Good
nice to see you too.
So it's who you're with. Okay.
Yeah, you and me. Here we are.
I'm going to have to think about that. You're fine. No, I love him. I do. Anyway, still ahead on Squawk Box. David Rubenstein of the Carlyle Group is going to join us to talk trade. He's always doing panels. I don't spend any time with him anyway. The Fed, the 2020 election, and sustainable investing. We'll get his view from the C-suite. More from Davos is on the way. Stay tuned. You're watching Squawkbox. At least Mac is here, right? Can we get a shot of him?
Look, we've all got rooms right next to each other. We're all on top of each other. Except for Andrew.
Well, a little bit of it always there.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Boredom. Fitness enemy number one. So don't just run. 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 Mix it up. Skip. Run. Skip. Run. Give yourself a lift. Mix it up. Lift. Mix it up. Run. Lift. Splash. Skip. Lift. Run. It's crunch time. Skip. Mix it up. Run. Mix it. Add a boxing class. Skip. Run. Splash. Skip. Run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run. Mix it up. Skip. Mix it. Run. Mix it.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Welcome back to Squawk Box. The futures right now are about the midpoint of where they've been for most of the pre-market session, indicated down 79 points now on the Dow. NASDAQ indicated down 42 and change. S&P indicated down just under 14 points. We were worse, we were a little better, but that's been right about where we've been for most of the pre-market session.
Still to come this morning, sustainable investing. It's one of the hottest topics being talked about this year in Davos, at least on the panels. When we come back, the Carlyle Group's David Rubenstein will tell us what he thinks of the investment strategy. We're going to talk to him about a lot more, too. Stick around. We'll be right back.
Later on Squawk Box in Davos, Guggenheim's Scott Meinert on the record economic expansion and what might come next.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, keep me out the cold jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, East London jobs, West London jobs, extra hour in bed jobs, startup jobs, late start jobs, get home in the daylight jobs, banking jobs, building jobs, flexible working on a Friday jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem. And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Welcome back to Squawk Box on CNBC. Just thought of something funny. Live from the World Economic Forum in Davos, Switzerland. Oh, yeah. We're hearing this morning from the biggest business and economic leaders in the entire world. Just last hour, we spoke with National Economic Council Director Larry Kudlow. And here's what he had to say about the state of the U.S. economy. He likes it.
In the Trump years is essentially a mini upcycle. We've gone from 1.5% to 2% growth. We had it going at almost 4%. Then the Fed tightened. We're now down to 2.5% to 3%. I'm looking for faster growth. I think we're going to get 3% this year. The trade deals will help the Fed change policy. That was very, very important.
Joining us now to talk more about global growth, investing, and much more, David Rubenstein. He is Carlyle Group co-founder and co-executive chairman. And after 3.5, 4 hours, you get a little punchy. So I'm gonna really throw out. I'm gonna throw out the window. You're a journalist and an interviewer. I want you to interview me and Becky here now.
What?
Okay. No, the only problem is you have real world experience in a lot of things. Do you have to totally forget everything you know in the real world to be an effective journalist? Because I have to.
No, I don't think so. You just have to use your common sense, good judgment, a little self.
I'm kidding. None of the journalists I know have ever done anything but this. Anyway, you saw what Larry Kudlow said. It's the state of the. I was kidding. We're going to interview you again, but it can be a free exchange.
I'm happy to interview you.
It can be a free exchange. Let's do it that way. So he was very bullish. We've had at the same time Paul Tudor Jones and Ray Dalio with a plethora of issues that they see with the future, whether it's debt or whether it's income inequality. Where are we really, do you think, objectively?
Well, as Dizzy Dean, the famous pitcher, said, it's not really bragging if you actually can deliver. And so, yes, there's some bragging about the economy, but the economy's in really good shape. So people who aren't happy with the president, they may not agree that some of his policies work, but some of these policies seem to be working. So I'm not saying I'm a supporter or a detractor of his. I'm just saying that the policies seem to be working. The U.S. economy is in reasonably good shape. Who would have predicted a year ago that we'd be where we are today? Nobody would have, probably. So the economy is doing pretty well. It may never stay this strong for a long time. You never know. But right now, I don't see any prospect of a recession in 2020. And I also think unemployment's going to stay low. Interest rates will stay low. So economy's pretty good.
Becky, every once in a while, Druck will send something in. So he watches, Stan Druck last week. This is a fact. He said, when people start talking about capitalism not working, he said, tell them this. For every billionaire created, 250,000 people have been lifted out of poverty in the last 10, 20 years.
Well, look
for
at China.
Each billionaire, 250,000. Is that a fair trade?
China has more billionaires than the United States, but also about 1 billion people have been lifted out of poverty. Maybe 800 million have been lifted out of poverty since China has really become part of the global economic scene. So, yes, there are a lot of billionaires in China, but China's economy overall for everybody is much better.
What's our biggest problem right now? Is it sustainability? Is it climate change?
There are lots of problems. You always have problems. What would life be when you didn't have problems, right? So problems are, number one, I think we do have a lot of debt we have to pay off at some point, $23 trillion of debt.
Can we do that?
At some point.
I don't know if we pay it off. Can we manage it?
We can manage right now it's manageable, but at some point it'll have to be dealt with. If interest rates go up, that could be a problem. Number two is I do think we have income inequality and lack of social mobility. So the people at the top are doing well, but we have people at the bottom who are not really rising up. And one of the reasons is we have a large problem with literacy. 14% of the people in this country cannot read above a fourth grade level. That's a problem. 14% cannot read above a fourth grade level. And right now, 80% of the people in juvenile delinquency system are functionally illiterate. 2/3 of the people in our federal prison system are functionally illiterate. So that's a problem. You have income inequality and social mobility problems. You have debt problems. And you also have the fact that, eventually, in my lifetime and your lifetime, we're going to have to deal with the entitlements issue. We have large entitlements that we're obligating to pay people, and we probably can't pay them fully as much as we promised. So that'll have to be dealt with.
We heard from Paul Tudor Jones about profit margins in 1970, where they are now, and that the amount of sharing from corporations between shareholders and employees is at the lowest level ever. As if it almost sounded as if corporate America got greedy, and I think it doesn't take into account the way we became a global player, and all the labor moved offshore at $3 an hour, and that hurt a lot of our middle class and our and low class people. And that's the thing. Aren't we trying to do the things that would reverse that? And some of this America First mentality may be warranted given what's happened.
There's virtually no economy in the world that wouldn't like the U.S. economy. The economy is doing pretty well for a lot of the reasons we discussed. Secondly, when the stock market does well, obviously people at the top do well, but who owns these stocks? Largely, it's pension funds.
They still argue that's not true, that only 50% of Americans own, even directly or indirectly, any stock.
Well, but that's indirectly, I think almost everybody owns something because they have pensions. And pensions are own so much of the stock in the stock market.
Pensions are harder and harder to come by.
So, yes, but there's a lot of existing pension funds. State employees have pension funds. There's a lot of and 401k. So the truth is, I think the U.S. economy can always be better, can always be fairer, but it's in reasonably good shape. And for example, 1 year ago, when we were here, people were thinking the U.S. economy couldn't get any better. Now, I don't know exactly why, but it did. Now, President Trump said today it was his policies. Maybe there are other things that we're taking into account as well. Who thought we'd get a China deal as soon as we did? We weren't sure the USMCA would go through. So I don't want to be trumpeting his policies only. I think the Democrats have done a lot to make things better as well. I think the USMCA is better because of some of the things they did. And I do think that they were pushing for a good, strong China deal as well. But in the end, right now, the U.S. economy is in pretty good shape.
So,
well, I was just going to say, Brian Moynihan was here earlier, Bank of America. Right. They're now paying a minimum wage of $20 an hour for every employee that's there. They do a lot of profit sharing back, $1,000 bonuses for almost the entire employee base.
Well, the financial system in our country has done pretty well. Who would have thought 10 years ago that the banks would be as strong as they are now? The banks are stronger than they've ever been in their history. J.P. Morgan just had record profits. Bank of America is doing very well. All the banks are doing pretty well. And I think that's filtering down into the global economy. But I don't want to make it sound like I'm Pollyannish. We do have some challenges.
But is that what you think companies need to be doing to address the inequality? That look, in some cases, it's what the Fed's done with quantitative easing that has built up the inequality. But does it need to be resolved by companies taking steps like that? And would you invest in companies that were doing that?
If I knew how to solve income inequality, I'd be in Iowa. Nobody really knows how to solve that problem. I do think, for example, solving literacy problems at the bottom would be helpful. I do think increasing the minimum wage is helpful. Mm-hmm. And I do think companies that worry about more than just shareholder return are probably the companies that are going to get more people buying their stocks in the end, and they're probably going to do better.
We need to match skill sets with people that are coming up. Obviously, it's not a one-size-fits-all. Private sector needs to help with that. We probably need to spend money on education more effectively. Where do we get the money from that? You don't like wealth taxes; it's never worked. Do we need more revenue? Do we need to reallocate the revenue we have right now? How would you do it?
Well, the tax revenues right now are probably a little bit lower than historically they've been, and I would say probably whoever is president next time will probably have to adjust taxes, be my guess. Nobody will say that right now, but I suspect there'll probably have to be some adjustment in taxes down the road because we don't have enough money to pay our expenses. The U.S. Treasury is running about a $1.3 trillion annual deficit now, and we have to deal with that. You can't keep running these deficits ad infinitum.
Unless you cut the spending.
You can cut spending, but
reallocate it.
It's easier in some ways to increase taxes than cut spending. In other words, it sounds like it should be the opposite, but sometimes it's easier to increase taxes because people don't notice it quite as quickly, and you do it down the road.
Get rid of some loopholes? You can would you raise the top marginal rate? It's hard to get enough money from just rich people. I mean, do you want to raise rates across the board?
There aren't enough rich people. I mean, if you took the money away from all the Forbes 400 people, that's not going to solve all your problem. The problem is the middle class, and the problem is taxing the middle class is very politically difficult to do. Right now, the average family of four in the United States, what do you think they make? $300,000, $400,000? How about $65,000 to $70,000? Right. That's the average family of four. That's the middle class. You want to tax those people? It's hard to do. If you tax people only above $250,000, you're taxing about 2% of the population. There's not enough of them.
So what do you think of the Democrats' plans, or some of the Democratic candidates, I should say, who have plans to spend much more on health insurance, on health care, on education, and other issues?
Well, when you run for president, I've been in presidential campaigns, it's easy to say you're going to do this and that. Getting these things through the Ways and Means Committee and through the Senate Finance Committee is not that easy. It's not easy coming up with plans that are actually going to make a big difference. At the moment, I think the economy is in reasonably good shape, and I don't see anything on the horizon that's going to interrupt it unless we have a war of some type that we don't anticipate. The president's speech here was, reasonably well received. This is not his crowd, by and large, but I think it was reasonably well received. He read from the speech that was prepared in part by Larry Kudlow and a lot of advisors, and he obviously had input in it. And I think it was reasonably accurate from his point of view about what he's done. Other people would disagree, but I think he gave a statement here that was probably better received than the statement he gave 2 years ago.
All right, we got problems, but we got a lot to be thankful for and a lot to be optimistic about. And Trump is, when Andrew Ross Sorkin writes a piece that he's being well received in Davos, it has to be true. And he wrote that this morning. So it's a better reception this time than 2 years ago.
I was just in a reception with him, with lots of business people, global business people, and honestly, they all wanted their picture taken with him. Nobody was shunning him. So whether that was true a couple years ago, I don't know, but everybody seems to be happy with him. Now, obviously, this is the elite of the elite. So I'm not saying the average person on the street is as happy as maybe the elites are.
Those are the deplorables that are happy. There's 63 million of them. You're the ones that he's trying to win over, not the normal people.
Well, there's not enough of me. He's got to win over the average person.
Okay.
Can I ask you one more question just about China? You're so closely sourced in Washington. You have a really good idea of what's happening. When we talked to you in August, you said that you thought a phase one trade deal would be signed within 4 months. That's about the time that we got it done. That was something that happened. Is there going to be a phase two before the election?
No, there will not be, and the president himself has pretty much said that.
Yeah.
I think phase two is much more complicated than phase one, and I think phase two, whoever is president of the United States could not probably get a phase two done in the next 6 months. It's too complicated, but I think a phase two can be done in the next 2 years or so, but it's a complicated thing because you got to change the way the economy is run in China. It's not that easy to do.
Better that we have a phase one and that tensions have died down?
The best thing about phase one is it will have some impact that'll be positive, but the best thing is it reduces the global tension between China and the United States. And I was just in a meeting with the vice premier of China, and the global tensions are so much lower than they were before. So I think that's the best thing that happened because of phase one.
We're on a path towards
I think we're not fighting with each other as much, and whether we get phase two done in a year or two, I don't know, but we're not going to have the tensions that we had before on economic matters.
When you interview people on your show, you ask tough questions. You try to do that. Now, you feel like you need to, right? So we asked Schwartzman, Trump or Bloomberg. Who would you pick, Trump or Bloomberg?
As you get older, your hearing goes down.
What do you do when guests don't? What's your tact when guests don't answer questions that you ask? What do you try to do?
I go on to the next question.
How about Trump versus Biden? Who do you pick?
Pick for who's going to win or who's
good? Who would you vote for?
Well, I generally don't like to say who I'm going to vote for because I think it's important for people to maintain some privacy. I haven't seen all the facts yet, but there's no doubt that Joe Biden would be a very strong candidate, and Mike Bloomberg. And remember, I do some things in Bloomberg TV. I'm very partial to Mike, and I think he'd be a strong candidate. So would Biden. I think unfortunately, there's no private equity person running for president right now, and that's a big problem that people in Iowa are commenting on.
And that person will make sure your carried interest doesn't go away. Got it, David. Okay.
All right.
Excellent.
Thanks a lot. I don't actually.
What issue voter?
I don't collect any carried interest anymore, but okay, I understand.
I don't get it. All right.
David,
Thank you.
very
My
much.
pleasure.
Can I come on your show sometime?
Absolutely.
Liar.
Tomorrow.
He has a live audience.
I can tape it today.
Anytime you
I'm
want.
going to get. I'll send you my email.
All right, I can do it today. I got a camera here.
Can't afford me.
Think of some really tough
I
ones.
can't afford you. Okay, I got it.
When we come back, Guggenheim Global Chief Investment Officer Scott Meinert is going to be our guest. He'll be joining us to talk about where he's finding the biggest market opportunities right now and the biggest risks. By the way, here's a live look at the panel that Andrew is moderating right now. It's all about valuing unicorn companies. He's speaking with Goldman Sachs CEO David Solomon. Speaking right now. Also, NYSE CEO Stacey Cunningham and General Atlantic's Bill Ford. Let's listen in as we head to a break.
I think the policy question you have to ask is more about should the standards around information, disclosure, discipline, governance, etc., be different? And what's the threshold? Because there's no question the process of taking...
Boredom, fitness enemy number one. So don't just run. Run, run, mix it up, skip, run, skip, run. Give yourself a lift, mix it up, lift, mix it up, run, lift, splash, skip, lift, run. It's crunch time, skip, mix it up, run, mix it out of boxing class. Skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run, mix it up, skip, mix it, run.
Mix it. Let's get this right, sir. You didn't see three men dressed as clowns take off in a van with a Renaissance painting because you were distracted by, and I quote, a sporty red compact SUV with a bold mesh grille, a sculpted bonnet with sweeping roofline on diamond-cut alloys.
And beautiful rear haunches.
So, you saw a Jaguar E-Pace. But what about the clowns?
What clowns?
Jaguar E-Pace, designed to steal attention. Search Jaguar E-Pace.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
All right, welcome back, everybody. We are a little more than a half hour away from the opening bell on Wall Street. In the United States, the futures are pointing lower, but that's been the exception lately. Here's our legendary investor, Paul Tudor Jones. He joined us earlier today, and here's what he had to say.
We're just, again, in the craziest monetary fiscal mix in history. It's so explosive. It defies imagination, and I don't think anything's changed. It reminds me a lot of early '99.
Joining us right now is legendary investor Scott Meinert. He is Global Chief Investment Officer at Guggenheim Partners. And Scott, thanks for being here.
Thank you. Great to be here.
All right, let's talk a little bit about what Paul Tudor Jones had to say. Just that idea that we could be in a position like we were in early 1999, where everything is kind of pointing to an increase in stock prices. You think that's the case?
I think he's right. I tend to look at this as the period after the Asian crisis. The Federal Reserve lowered rates by 75 basis points to save the world. And, of course, then going into 2000, they remained very accommodative, and they kept pushing stocks up into bubble territory. And then, of course, we got the famous internet crash.
I guess the difference now is that rates are incredibly low, 1.5% versus 4.5% like they were back then.
Right, which I think supports higher stock prices in and of itself. And I think, look, with the Fed pivot, I think we've gotten a revival in economic activity. We've got the trade war on hold now. There's a lot of reasons to be positive about the economy for the next 12 months or so. But, I forget who at the Federal Reserve originally said that expansions don't die of old age. Mm-hmm. The Federal Reserve kills them. And so it's just a question about when will the Federal Reserve feel that it has to kill the expansion.
So those were policy mistakes the Fed was making. When you were warning last year about a myriad of things, stock sell-off or a recession or any of those things, that was based on mistakes being made. In hindsight now, those were mistakes. In
2018.
Those are mistakes that the Fed was making then. Did you know they were Fed mistakes at the time, or did you think the Fed was doing the right thing?
Well, Joe, I'm on the advisory committee to the New York Federal Reserve, and I would take data into every meeting, and I would show them how M2 growth was slowing down. I would show them other data in the economy, and I would say to them, I think you're being more restrictive than you think you are. And, the quantitative tightening while the Fed was raising rates was like a double whammy. And so, of course, whenever I brought that point up, all the academics around the table told me how stupid I was.
Well, in hindsight, it made President Trump look like some type of monetary genius for being early and calling out Powell. And we know he's a real estate guy who likes low interest rates, and he's president, so he likes low interest rates. But did it turn out that he actually was more right than the Fed and all the academics?
I think he was. In crazy hindsight, it's he clearly. I think he was more concerned about slowing the economy in his administration.
Right.
But at the end of the day,
all presidents want low rates.
Exactly.
But they're usually not quite as outspoken as he is.
Well, and I think the Fed's going to be, after everything they've just been through and the criticism that they've taken, they're going to be really hesitant to start raising rates again.
Well, that's scary, right? If they should, they should. They should.
Yeah, that's right. And that's why, the stuff I was talking about in risk assets. I mean, when you look at where corporate debt's trading, the relative premium to treasuries is the narrowest it's been since 1997. Risk assets are priced, or in the bond market at least, are almost priced to perfection. But of course, bull markets go as long as they go, and as long as the central banks keep the liquidity spigots open, I don't see any reason why we just can't keep pushing asset prices higher.
Your concern, though, when it comes to the corporate bond market is the deterioration just in terms of quality and how many defaults have been there.
Right.
Or increased.
Look, we've had a 50% increase over the last year in the number of defaults. Everybody will point to it and say, well, that were CCC credits, or that was all in energy, or this or that. And, that's to be expected. The weakest links will go first. But one of the most disturbing things, Becky, is when you look at some of the companies that are rated BBB, and even some single A companies, that using the rating agency's own criteria are already junk. And, how do they do that? They basically argue that, there's a plan to delever. They did this acquisition. They're going to pay down debt. They're going to get the ratios back in line. But, at some point, the music will stop. And all these companies, not everyone is going to get a chair in the musical chairs game. And we're going to find out then, as Warren Buffett famously said, when the tide goes out, we'll find out who's been skinny dipping.
Yeah.
There's a mental image for you.
Yeah. you did say as long as the spigots remain open, things keep working. Do you look at that as half empty or half full? Is it just, is it unjustly going higher, or it's not, or is it the Fed is out of the way in a strong economy, let it run?
Right.
It's not going up on just the balance sheet expansion, is it?
No, not. I mean, that's why I'm more optimistic about stocks than I am about bonds, because when you look at earnings, I mean, I think we're gonna get some pretty good earnings growth this year. I mean, the economy, when you have an unemployment rate this low, you bring in a lot of consumption, especially people that are low wage workers. They tend to consume 100% of their income. So I think the fundamentals in the economy are actually pretty good. But again, eventually, if there are price pressures, the Fed will feel an obligation to kill the expansion.
Right.
Scott, thank you. Good to see you.
All right, let's get back across the phone with another great guest, the New York Stock Exchange, Jim Cramer. Had a lot of legendary investors on today, followed by... Okay, so I couldn't help but think of Sally Field. You like me, you really like me. That's kind of what the president came into in Davos this year. Even Andrew wrote a piece this morning, Jim, about he's the new Davos man. I mean, it was a pretty accommodative audience this time, which was a lot different than 2 years ago, Jim.
Look, I was surprised. He could have taken after the Europeans. I know that he's not happy with the Germans and how much they export here. But his tone was set by that great deal with the French. Yeah, you're right. I mean, I think that people are trying to figure him out. They were expecting a scold. They were expecting some sort of disquiet, and they didn't get it. At the same time, of course, obviously, this Chinese virus is dictating a lot of the stocks that we have here, regardless of the depth of it. But you guys' interviews have been terrific. I thought Larry Kudlow was right. I think that we could have a tip to 3%. We're getting already earnings that would indicate that we could get that. But I do think that Larry's right to be optimistic.
We blame, I guess we got to wrap, but, we blame a lot of income inequality on ourselves, but China took a lot of our jobs. Maybe that'll help, Jim.
I mean, that's that kind of
right?
We're doing so well, we got to help others. And let's help ours. Let's make it so all the people who are in trouble here do better.
All right, Jim.
Thank you.
Right. All right, Jim. Thank you. We'll see you in a couple of minutes, and we'll be right back.
Boredom, fitness enemy number one. So don't just run. Mix it up, skip, run. Give yourself a lift, mix it up, lift, mix it up, run, lift, splash, skip, lift, run. It's crunch time, skip, mix it up, run, mix it out of boxing class, skip, run, splash, skip, run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing until March. T's and C's apply. Run, mix it up, skip, mix it, run, mix it.
So, this is how it is, money. My daughter has flown the nest. I put up 10% as security for her new home. And when she keeps up with her repayments, I'm going to get it all back with interest in 5 years from Barclays. I will miss her. I'll even miss Dave, her cat. So come on, money. How about we go buy a kitten? Barclays Family Springboard Mortgage. Make money work for you.
Your home may be repossessed if mortgage payments are missed. Deposit returned with interest after 5 years if no repayments missed. Subject to application, financial circumstances and borrowing history. T's and C's apply.
Hello, I'm your captain for today's Virgin Atlantic flight. Please drop everything and pay close attention to the following announcement. The sail is now on. Our crew are ready to take your bags and stresses away. The cocktails are ready to serve, the movies are loaded, and we're all set for takeoff to the Caribbean. So, take your seat in our award-winning economy class. We're ready to go when you are.
The Virgin Atlantic sail. Fly amazing for less. For more details, visit virginatlantic.com.
You want to turn that tap off, don't you? That's because we all know that wasting isn't smart. And yet, as a nation, we waste electricity every day without knowing it because our energy system is outdated. Smart meters not only help us stop wasting energy at home, they'll also help build a more efficient energy system so we can reduce waste across the nation. From the campaign for a smarter Britain.
Consumer action required for personal savings. Smart sports wagering talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Tuesday morning, welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer's back at Post 9 with me and David Faber at the New York Stock Exchange. Futures down to start a shortened week as China confirms this new respiratory virus. Davos begins along with the Senate trial of the president. Earnings kick into second gear tonight with Netflix, IBM. Europe is red, the 10-year just below 1.8. Our roadmap begins with a rally pause. Stocks are set to pull back from record levels at the open amid growing concerns about the spread of this new virus in China.
Plus, sustainability becoming the new standard. President Trump says the U.S. will join the Trillion Tree Initiative, and global business leaders continue to say there is growing demand for companies to do right by society.
And we welcome back our own Sarah Eisen, live at the World Economic Forum in Davos, joined by the chairman and CEO of UPS later on this hour. As we said, futures are down ahead of the open. This deadly virus outbreak in China is cooling markets globally as top business leaders meet in Davos for the World Economic Forum. Among today's early speakers was the president, touting the recent rally in the stock market as his impeachment trial in the Senate gets underway in Washington. Listen to what he said.
Years of economic stagnation have given way to a roaring geyser of opportunity. U.S. stock markets have soared by more than 50% since my election, adding more than $19 trillion to household wealth and boosting 401ks, pensions, and college savings accounts for millions of hardworking families.
A lot of headlines out of the president's address, Jim. Among them, negative rates, quote, something I could get used to very quickly. Love that.
Look, he still wants lower rates. I think he makes an exaggerated claim. I know that Larry Kudlow was the one telling a pretty good story. He would need lower rates to be able to get up to 3% or some sort of tax deal. Look, I expected a scold. I expected, hey, listen, I finished China for the moment, and now I'm going to go after Germany. And I am kind of blown away by a tape. Here's a statement you typically don't make. He was very statesmanlike. It wasn't on Twitter. It was actually done there. And I think he kind of took some people's breath away. If it weren't for this outbreak, I think that we would be up on his speech alone. Because I think there was much. He could have gone there and blasted away. Look, he was so much less acrimonious. I think that's important.
Yeah, we're going to talk about ESG in a moment. Maybe the only sort of collision thematically that he had was with climate change. Quote, we must reject the perennial prophets of doom. When referring to those who are saying we're on the cusp of some sort of emergency globally regarding climate.
But there he is. He's been using these terms. There was a really good article in the paper today. He's worried about some issues involving climate someday. I think he's trying to figure out how to reconcile his position with everybody else's position in the world without being left behind.
Well, but what's been interesting of late, certainly, Jim, and you know this, having spent time with Satya Nadella, is the fact that corporate America globally, actually corporations, moved in part perhaps by their own shareholder base or the shareholder bases of the future, are doing a lot more than government, at least in this country.
Oh,
not necessarily around the world. Right. We're talking about an administration, to be fair, that still won't even use the words climate change.
Right.
That bans it basically from the lexicon in any of the agencies, that has rolled back environmental regulations across the board in many areas. So I don't know what he's trying to use or not use, but it's clear in this country that corporate America is certainly more focused on the issue.
Yeah, I mean, Satya Nadella really laid out a plan. I mean, by the way, his plan is so no-nonsense, it's going to be audited. And they can have, along with others, a real big change for what utilities are going to do. I mean, obviously, they want to get rid of coal. The president is not like that. They would like everyone to shift to more wind. You can't do it on a dime. And they'd like to switch to more solar. There's no doubt about it. When you hear this carbon footprint being rolled back, it can play a role, provided that you do the tree initiative. A lot of people, by the way, think this is all Pollyanna, but I know Mark Benioff is talking about tree initiative. I know that there's a big green bond issue, not greenwashing, from Bank of America. So there's a lot of momentum, regardless of what the president wants to do. By the way, Germany and China are the outliers. They're still putting up coal plants.
Yeah.
It's kind of strange. We don't put up coal plants.
China had committed to certain things, but seemed to back off.
They did.
In terms of, certainly in terms of coal. Whereas in this country, as you've made the point many times, coal is just, well, it's not an economical way to create energy.
No, I mean, remember, a coal plant lasts 40 years. We were the Saudi Arabia coal under President Carter. These plants should all be decommissioned. I mean, think about 40 years when he did it. Talk about 78, 79. So I think that this is a natural evolution. Everybody is closing coal plants. And in exchange, a lot of people would like to do wind and solar, but they know that natural gas has to be the base, but it still produces, as bad as it is, it produces much less than coal. So I thought the president might have, if he wanted to, he could have chided China and chided Germany on coal, and he didn't do it.
No, right, they're still part of the Paris Accord, though, we should point out.
Yes.
We're not.
Oh, instead, regarding Xi, he said, Xi is for China and I'm for the U.S., and other than that, we love each other.
Yeah, love each other, I think, is a strong term.
Truthful hyperbole.
Yeah, yes. I mean, look, I didn't read an article that said that we had a good trade deal. But if maybe they didn't read the 110 pages. I mean, the 110 pages is really pretty amazing of the specificity. Now, a lot of the things that we got, we don't even make here anymore. But to say that the deal's a joke and to say that the American consumer's really been hurt, which is really kind of the narrative I read in traditional media, doesn't make sense. We had very little CPI inflation, almost none. And I do believe that we're going to get a lot of what we wanted, particularly the companies that were at the press conference. How about that press conference? Was that kept the Chinese waiting? I know that we love each other, but you mentioned everybody who...
It was a unique.
Wasn't it? That's it.
It was unique.
Unique. Yes. David always seizes on that right word.
Yes.
That is not judgmental. Unique.
It was unique.
Speaking of socially responsible investing, ESG, it's emerging as one of the main themes at Davos. This is Paul Tudor Jones this morning on Squawk addressing that.
If you had a blank sheet of paper and we were starting and trying to maximize societal happiness and output, and we have those five stakeholders, shareholders, employees, customers, communities, the planet, would shareholders be the most important thing to manage companies around? I don't think so.
Comes on the heels of Jim's interview with Nadella, of course, last week, where Nadella had some striking words, I thought, about the threat of climate change. Yeah. Today, BIS has a piece on what they're calling green swans. Now, threats to climate that could trigger, in their words, some kind of systemic financial crisis.
Well, I mean, Sadia clearly feels that way. I mean, he's thinking about, I made the joke to him off camera about how you can't see out of your window to buy windows. And he was saying, well, look, it's not funny. It's not funny. That's going to happen if we don't get our act.
That was the announcement from them in terms of being carbon negative by 2050 in particular. In other words, removing all the carbon they put into the atmospheres of corporations since 1975 was fascinating. But I also thought Tudor Jones's comments during Squawk Box were really interesting. He was very much that point that he continued to make, which is not dissimilar from what we heard from the Business Roundtable some months ago, but this idea that shareholder return is not necessarily paramount now. And we're seeing it reflected to a certain extent in at least the dichotomy of candidates and the Democratic nominating process for president, certainly Warren and Sanders. It's just interesting that it continues to be a theme.
Oh, yeah.
And it is coupled with, of course, this ESG move that we've been trying to trying to highlight over the last few weeks and months.
Big theme, greenwash. Who is real and who isn't? And Sadia made the point over and over again. Look, we are going to audit. We are going to make sure the scope of three scopes. One is obviously his company, but two are the vendors. Boy, the vendors could be under pressure because there's such a big team there at Microsoft. You want their business. And then he said the users. Now, I don't know how to compel the users. But this idea of the Earth as a stakeholder, originally brought up by Mark Benioff, would make it seem like, you know what, if they have a vote, there's a lot of things that are
different. Tudor Jones making these points about capitalism, and obviously he's a capitalist. We all are. Yeah. That in the 60s, in terms of GDP growth, it was far higher because even though profit margins were far lower, a lot more of profit was going back towards the worker,
Yes.
going back to the worker, and that's. I don't think he's a supporter of Warren or Sanders, but it sort of sounded more like something they would say.
Well, I got to tell you, if I were the Chinese, maybe this was behind the deal, they have a very different attitude toward China. Their attitude is to punish China because of coal.
That is who?
Sanders.
I see. Right.
Yeah, Sanders and Warren. They are after China big. So I think the long game said that it's only going to get worse for us. So, because if the Democrats win, they'll actually try to blockade us, so to speak. There isn't any sign that they want to do more business with China, particularly because they care much more about the climate than our current president, who has a unique position.
But having spent another week out there at JPM, healthcare, obviously, and just in general, with what is your sense of this movement towards a focus on sustainability by these corporations? Today, I think Starbucks with an announcement as well about plant-based.
A year and a half
on their menu.
Right. A year and a half ago, if you asked about it, it'd be like, oh yeah. Now they bring it up. They bring it up as the second point after what they're doing. I mean, and everybody. I mean, companies that don't have a big footprint, the drug companies, but everybody wants to prove that they care. And it'll be interesting to see what. I mean, if you're listening to Schlumberger call on Friday, which was a really great call, they did not bring it up. Schlumberger did not bring it up, but maybe that means Schlumberger is not going to get the price earnings multiple, even though they had a very good quarter. They had tremendous cash flow, the dividend, and they didn't buy any stock back, but things are really good. But owning an oil stock was something that people talked about. That is strictly forbidden.
Yeah, I'm looking through the Starbucks announcement now. It does involve expanding plant-based options, shifting from single-use to reusable packaging. There's some carbon reduction in here, regenerative ag practices, reforestation, things that sort of they've worked on regarding free trade and coffee for years. Jim.
Mark Benioff is adamant that if we plant all these trees, they'll do great. I think the key to planting trees is make sure they don't die the next year, which is what happened to Bloomberg's tree initiative. I hope that Starbucks fixes it.
What? Some of those trees are still alive.
No, that was Bloomberg saying it to people, saying, "Listen, the key is not to plant, but to plant and make them live."
It's hard to make them live on a street in New York City. It's a little easier.
Well, you can plant those stinko ginkgos.
Yeah, you can.
Those things can survive nuclear war. Right?
Yeah.
Right. Yeah. But there's Starbucks making it. Look, that's a concerted effort. I wonder whether Dunkin' Donuts is ever going to get rid of the styrofoam that makes it so hot. Right? It's pretty good. I wonder if the Starbucks will get rid of those lines in the airport. Because that's the franchise ones. They franchise those.
The packaging is a big deal.
Packaging is huge.
Figuring out how to get people to bring in reusable, that's very good.
Clorox is trying really hard.
I mean, look at a typical wastebasket outside of Starbucks. It's just filled with Starbucks.
Well, they got rid of our
Starbucks.
They got rid of our Starbucks right across the street.
Not getting picked up by the sanitation.
All right. Well, is that really their job?
Yes.
It is?
Yes.
Okay.
It is
it's
their
unique.
job.
Unique position you have.
Yes.
I'm using that unique. It's better than ill-advised in some cases.
In some ways.
Got to keep it. You got to vary it up a little bit. We'll get Kramer's Mad Dash. We'll count down to the opening bell. Later on today, we're going to head out to the World Economic Forum in Davos, where Sarah Eisen is going to sit down with the head of UPS, the new head of the IMF. All of that in just a few moments. Meantime, futures, as we said, a little soft today. We'll get to some news on Boeing, Best Buy. There's some valuation calls on the banks, upgrades of Intel ahead of earnings season and week 2. Back in a minute.
I've got my own place now, Money. My parents put up the 10% security. And when I keep up my repayments, they get it back with interest in 5 years from Barclays. And now we can do whatever we want. Right, Dave? We don't have to tiptoe up the stairs. I can paint the living room purple. Don't look at me like that, Money. It's my house. Barclays Family Springboard Mortgage. Make money work for you.
Your home may be repossessed if mortgage payments are missed. Deposit returned with interest after 5 years if no repayments missed. Subject to application, financial circumstances and borrowing history. T's and C's apply.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. At all protected.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
10 years ago, the book The New Jim Crow helped ignite a movement against mass incarceration. This week on the New Yorker Radio Hour, I'll talk with the author, Michelle Alexander.
Millions of people have been relegated to a permanent second-class status. It wasn't a message people were eager to hear, but I think it is today easier to see.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Smart sports wagering talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Welcome back. We'll get started with trading here. First trading day of the week. It is Tuesday, of course, so a shortened week, 13 minutes or so from now. Tesla has been getting a lot of attention. Of course, it's near a $100 billion market.
Well, here's another analyst trying to poke a little hole in it. Tony Sacconaghi from Bernstein. Very distinguished. Comes on halftime a lot. Maybe we'll be there today. I don't know. He says Tesla stock has doubled in 6 months. When has this ever happened before? He has a $325 price target, which would be down here. But what he says basically is that the risk reward continues to be not great. The dramatic outperformance is at this point almost too good to be true. David, there is an element, and people are talking about this, that it was a big short squeeze. It's also an element which just says they got a German factory. If they can put up as fast as the China factory, they'll make the numbers. There was a note this weekend about GM that nobody likes these cars except for Tesla in terms of electronic vehicles. Obviously, it's more than just EV. They've got a lot of other things that people don't talk about enough. So, I mean, he joins one more chorus of people who says it's too late, and the stock doesn't seem to quit.
It doesn't seem to stop, does it? The Journal today talking about that German factory and saying it's going to be highly unlikely they can put it up as quickly as they did in China.
Because of the bats?
Really was almost just a year because of the bats and a lot of different regulations.
World War II bombs?
Yep.
They got to clean the bombs?
Got to clean
I don't know. I think Elon, he's defied a lot of people in terms of skepticism.
People don't realize how hard he pushes in terms of getting things done.
I don't know if
I hear this not just from Tesla, but his other companies, some private ones even, that you don't realize that he's always pushing hard.
Well, now that he's not, let's say, squandering his time on Twitter and really kind of castigating those who don't understand, but he's focused entirely on work. Look at this thing.
Yeah.
I mean, people say,
come on, Jim. What? I mean, this is a heck of a move. Don't you think at this point, if you've been along, maybe it's not a bad idea to take some profit?
Yes, but remember, I'm more disciplined than the people who own Tesla. I think the right direction is going up. It has to grow into that market cap. It's not there yet. Tony's piece, obviously, again, you look at it and say, well, hold on, he liked his price target was $325. What good is he? The answer is that this is a company that many people shorted, and they never thought it could reach earnings. And if it does, at $10 per share next year, it's still expensive at this point.
Yeah, these numbers are incredible, though. Also, Musk in for a big payday, I believe, right around this level. All stock because of a agreement he had entered into a couple of years
ago. Well, look, he's a miracle worker. The China, 10 months for that factory, tremendous demand in China for Tesla. It is not just EV. It's fun. It's fun to drive. I like it.
All right, we got a lot more, of course. A reminder as well as we head to break. Can't get enough of Squawk on the Street? Me neither. So you can watch us live or anytime on the go. It's the CNBC app. You got to download it today. We're going to count you down to the opening bell, of course. We got one in about 10 minutes and a lot more Squawk on the Street.
Turn on my TV and boom.
The Norwegian sale is now on. Fly to Europe from £29.90, North America from £134.90, or South America from £189.90. And with low fares to over 150 other destinations, the world has never been closer. Start your journey at Norwegian.com. All fares are one way from London Gatwick. Baggage fees apply. Travel periods vary by route. Visit our website for more details. Sale ends Monday.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. One free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Go courtside with the NBA on TuneIn. With the NBA on TuneIn, hear your favorite team and players take on their biggest rivals during the biggest games throughout the year, including regular season showdowns, the 2020 All-Star Game, and the NBA Finals in June, featuring the home and away calls for all 30 teams. Plus, with the NBA on demand, relive the best moments of the season by listening to the past games in their entirety. Listen to the NBA all season long on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Asia was weak overnight, and futures are this morning as well as China confirms this new respiratory virus. We're watching, obviously, China stocks, luxury goods, airlines ahead of the Chinese New Year. Let's take another look at the futures here. Opening bell a few minutes away. And don't go anywhere because we'll get early movers and an interview with the CEO of UPS in a moment.
When I look in the mirror, you might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Along the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
Hear the action live on TuneIn Premium.
Move, and a shot, they score!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Driver to take her to the Hotel Pierre.
J'aimerais aller à l'Hôtel Pierre.
Oh, c'est très bien. Babbel focuses on natural conversation. You can speak and pronounce with confidence. Start speaking a new language in 3 weeks. Try it for free at babbel.com.
We are KiwiCo, and we deliver hands-on STEM projects designed to inspire young innovators. Kids of all ages can explore science, engineering, art, and more. Get your first month free. Visit trykiwico.com.
A golf course is designed to be difficult, to challenge your thinking and test your execution. But great minds are driven to seek out the complex. They see what others don't, from an angle others won't take. They learn that embracing those challenges is what sets them apart. I am Justin Rose, and we are Morgan Stanley.
I used to pay way too much for clear vision, but thanks to my VSP individual vision plan, I'll save on a comprehensive eye exam and glasses. In fact, you'll save an average of $200 each year when you find a plan today at vspdirect.com.
The opening bell is brought to you by Nuveen, a leader in income, alternatives, and responsible investing.
You're watching CNBC Squawk on the Street, live from the financial capital of the world. Opening bell in just about 4 minutes on a busy Tuesday. We're going to cram a lot into a holiday-shortened week as we keep our eye on this new virus that's been confirmed by China. We were mentioning Paul Tudor Jones on ESG a moment ago, and he did have some comments, Jim, about this global rally we're in. Essentially called it crazy town.
Right. Well, look, I think that he's one of those guys, and I love him, all right, but focus uniquely on what the Fed's going to do and how there's a lot of liquidity. I come back and say earnings. That if the earnings justify this price-to-earnings multiple, they'll be fine. The earnings are not controlled by the Fed. The earnings are much more controlled by the companies. I think that he is a futures guy. He's not a stock guy. I end up agreeing with him that maybe we get to pay too much for the earnings. But if the earnings come in, I won't feel like it's that dangerous. Morgan Stanley reports a really good number last week. And what happens? Very typical. Citi downgrades them. Fairly valued. 10 times earnings. 10 times earnings, fairly valued. It was in a monster quarter. James Gorman made a point that there were no down days. That's why they are a completely different company. It meant nothing. It means nothing to the street.
27% in 3 months.
But it still sells at 10 times earnings. I mean, they're all up a lot, and you could expect that they should have reversed big. What they did was they did far better than expected, and they stayed in place.
Well, to your point, Credit Suisse does up their target to 3,600 today. They were at 34.25, based on EPS growing 6.2.
Well, that I'm with. The idea that you can just say, hey, listen, it's the Fed. I find that tiresome because, frankly, our rates are much higher than the rest of the world. So.
Guys, wanted to highlight an activist play that hit a few minutes ago, but let's get to it before the bell. Evergy, I don't know if you know this company, Jim. It's the merger of Great Plains and Westar, regulated utility, Kansas, Missouri. What's interesting here, Elliott owns 11.3 million shares, $760 million. It's about a $15 billion market value. So you can do the math and figure out their percentage ownership. But what is kind of interesting about it is they want them to stop buying back stock and start investing more in the so-called system, the transmission lines, wind power, decommissioning coal plants. Elliott is not an ESG activist at all.
That's the opposite of what you would expect.
Yes, and that's what's somewhat interesting here. They say their low rate-based growth and its over-reliance on share buybacks have created deep concerns among investors over Evergy's long-term growth outlook and its ability to create value after the share buybacks are completed in mid-2020. What do they want them to do? They want them to actually, their coal plants until the end of their useful lives is uninspired, their intention of operating them, and economically inefficient. Evergy lags behind leading peers that have pledged to reduce carbon emissions by 70 to 80% by 2030 and achieve net zero emissions by 2050. And they point out that a lot of their system is an area where the wind is a huge resource, and they want them to do more wind. Now, by the way, this is not an ESG play for Elliott, but it is an ESG play,
right?
Overall, at least in what they're pushing here, and you can see the stock is responding. Nominating window, by the way, doesn't open, I think, until March. They did some things, though, recently, apparently on a governance perspective, that upset Elliott, and that's why they may have chosen to come public.
Well, I do think that we are now in a world where you're going to get a lower price to earnings multiple. These typically trade relative to interest rates.
This is traded fairly well given interest rates. However, it has underperformed. Elliott underperformed its peer group because utilities are doing quite well, and apparently investors are rewarding those utilities that are investing in the system.
Yes, AEP. They have decided as much as they can. Let's be environmentally friendly. Let's do what's necessary.